This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Nobody's here except me and Michael Barr. Mateo gone, Sweeney gone. They're in sabbatical. They're actually working important assignments for Bloomberg LT. Good morning to Commonwealth. Alex Steele and Paul Sweeney down in Orlando with Commonwealth as they celebrate with all their advisors. We thank Commonwealth for their support in our economics. Speaking of which, we go into that with inflation. Who's subbing in for Paul Sweeney today? Giroux couldn't do it. Sassower couldn't do it. Tucker couldn't do it.
So they came to me.
They came to you. I am thrilled to tell you, coast to coast and around the world, Jess Menton darkens the door to this. Is the first time you've been tortured by this, huh?
You know, no, we've done it before, you and I, maybe like 6 months ago.
Was I here?
Briefly, yes. It was back when the schedule was a little different, but we did get to co-host for 1 hour. It was tons of fun.
What are you writing about? Everybody just wants to know, what is Jess Menton out of equities with market coverage for Bloomberg? What's the single topic you're looking at today in print?
Actually, we're taking a look at how stretched utilities are, because that's been more of an AI.
That's for the AI call.
Yeah, that's been an AI call. So Sentiment Trader was actually looking at how in the utility sector, actually with those stocks are trading 5% within a 252-day high, topping around 96%.
It's too much data. It's 7:01 a.m. It's
so anyway,
too much.
Things are starting to get a little stretched here when you're looking at some of the positioning type of data.
Very good. Well, that's what we get from Jess Menton. We have a lot more for you. James Dimon in conversation with Lisa Abramowitz later. Ray Dalio in conversation with Sonali Basak is too. We'll do that in the 9 hour, and a real treat coming up in moments. Torsten Slok of Apollo. Right now from the Interactive Broker Studios of Bloomberg Business Flash, John Tucker.
All right, futures indicate a higher open on Wall Street after yesterday's about 1% sell-off for the major averages. Dow futures right now up 65. S&P E-mini futures 23 points higher. The NASDAQ futures right now up 91. PepsiCo down close to 1% pre-market, trimming the revenue outlook for the year. They're blaming cash-strapped consumers, boycotts in the Middle East, and a major recall that hit volumes of its food and beverages. Chinese stocks, they pulled back after gaining more than 10%. China disappointing investors, holding back for more major stimulus as it reopened after a week-long holiday. There's now a question whether the Federal Reserve will cut rates at all next month. Fed funds futures now put a 15% chance of no cut at all. And then the VIX, which gauges equity market volatility from the options market, that is back above 20. And then Honeywell planning to spin off its advanced materials division. They're trying to create a business that may be worth more than $10 billion. The CEO trying to simplify things right now. 2-year yield, 2 basis points lower, 396, and the 10-year unchanged, 4.02%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jess and Tom.
John Tucker, thanks so much. Jess Menton and Tom Keene with you. And you get started. Torsten Slok joins us. For the street, the ex-Deutsche banker puts out a note 9-ish o'clock every morning, maybe 8-ish, which is a single paragraph, 2 paragraphs, and 1 chart. It is read by Global Wall Street. Torsten, thanks for joining us for the entire half hour. We'll do some hurricane stuff here in the middle here. This is so serious for Tampa and the Gulf. Torsten, what's your chart this morning? What's the number one thing that's on your mind at Apollo?
So, well, the chart this morning is showing that 26% of power consumption in Virginia goes to data centers. So the need for investment in renewable energy, the need for investment in data centers, the need for long-term capital to invest in long-term projects is clear, and including in boosting here the AI revolution.
Why can't Google buy their own utility?
Well, some of the tech companies are actually building their own power plants and building their own power sources. But the bigger issue, of course, continues to be that, as we all know, one search on ChatGPT takes 10 times as much energy as one search on Google. So therefore, with everything that's going on everywhere in AI, large language models, things getting more complicated, processing power is needed. There is certainly a very substantial need to power the AI revolution, and that does require long-term capital to finance these, including data centers.
Torsten Slok and Jess Menton on the same page. She's writing about this morning for Bloomberg. Jess, let's complete your story. Questions for Torsten Slok.
Well, you were talking about how the risk to cutting interest rate too much too quickly is, especially on the back of the latest jobs report, could become, and especially looking at inflation, might be too hot again. Expand more on that, because we're going to get an update on CPI later this week.
Yeah, this is very important. So the key question really is, why is the economy still so strong? Your textbook would have told you that when the Fed started raising interest rates in March of 2022, the economy should have begun to slow down, because when interest rates go up, people should be buying fewer cars. That's not what we have seen. When interest rates go up, you should have seen the housing market slow down. That's not what we've seen. So there's a number of tailwinds to the economic outlook, from AI, from defense spending, from fiscal policy, the CHIPS Act, the Inflation Reduction Act. All those things combined have kept the economy afloat, including also that consumers were less sensitive to interest rates because they had locked in mortgage rates at very low levels. 95% of mortgages are fixed rates. So because of these very special forces, we've just not had that slowdown that the Fed has been looking for. And we think these forces will continue. So therefore, the answer to your question is, we still think that the economy is doing fine. There is no need for the Fed to lower interest rates.
And you made a bold call earlier this spring that the Fed wouldn't cut interest rates this year. What changed?
So we actually still think that that was and is the right call, because now we're debating, was it a mistake for the Fed to cut rates 50 basis points? We just saw non-farm payrolls on Friday. It again shows that there is no need to lower interest rates. So this raises the question, why did the Fed lower interest rates? And this, Tom and I have been talking about this for years, because they have an R-star model, a framework, which says that, well, our long-term interest rate needs to be lower, so therefore we need to lower it, not because of the incoming data, but really because we think in the long run we should have a lower level of rates. So yes, it is true that they did cut, and our expectation is that they may even also cut here in November. But given the incoming data, the risks are rising now that we may have more upside risk than downside risk to the economic outlook.
Torsten, I want to bounce off your continental view of years ago at Deutsche Bank. To me, the great differential here, and becoming ever more evident each and every day, is a nominal GDP difference between Europe, say, and the United States. I got 4%, even 5% nominal working in the U.S. Europe's pretty much flat on their back. Is that because of our debt buildup? Are we our grandchildren essentially funding our nominal GDP?
Well, the U.S. has some tailwinds that are rather unique to the U.S. We have an AI revolution in the U.S. We don't really have that in Europe. We also have significant support from the CHIPS Act, the Inflation Reduction Act, the Infrastructure Act. We don't have those tailwinds in Europe either. And on top of that, Europe has now some headwinds, of course, from energy transition, from the challenges, more broadly speaking, that they have with the economy with low productivity. They have some challenges also with elections in Germany and in France that have created a little bit more complicated political situation. So broadly speaking, the US has some tailwinds, Europe has some headwinds, and that's the reason why Europe still is, unfortunately, having a weaker outlook for growth.
So you're having a cup of coffee with Rowan and Zelter. I know you're not on speaking terms with them, but let's presume you're doing an 8 o'clock meeting with the fancy people at Apollo. What are you advising them about the general market, the tone of our equity markets?
Well, we talk every day, and the advice, of course, is here still that the economy is doing just fine across the board. A wide range of indicators. We are seeing that if you look at the daily data for how many people fly in airplanes is still very strong. The daily data from my Bloomberg screen for how many people go to restaurants is also very strong. The daily data from my Bloomberg screen on debit card transactions is also very strong. The weekly data for how many people go to the movies, go to Broadway shows, retail spending is all very strong. So that's basically telling you that, broadly speaking, there is no recession. There's no sign of a recession. GDP last quarter was 3%. Atlanta Fed GDP now for this quarter is 2.5%. Where is this slowdown everyone is so worried about? So it's not surprising that non-farm payrolls continues to be strong. So the advice really is that look at the data that comes in instead of looking at frameworks for thinking about where we might be theoretically with our star and the Fed funds rate in several years' time.
What's the top question that you're getting from clients, and how do you use that as a potential sentiment gauge?
Yeah, a very important question is, of course, financing and financial conditions. Financial markets are very easy with the stock market, as usual, close to all-time highs. Credit spreads very tight on IG, high yield and loans. And likewise, when it comes to financing for companies, there is a general trend of debanking where financing is moving away from the banking sector, moving to long-term stable financing capital sources. And those types of financing, of course, are beginning to play a bigger and bigger role because there is a change in the financial system that's beginning to be much more pronounced and play a more significant role when it comes to providing financing to consumers and providing financing to firms. So this debate about how is the financial system changing, both in terms of how we save for retirement, also in terms of how consumers borrow, how firms borrow, and also in terms of the role of banks, is playing a very important part of my conversations with LPs at the moment.
We're going to come back with Torsten Slok. Torsten, please stay with us for the entire hour. We've got to do some hurricane stuff in a moment. But right now, with futures up 21, the VIX out 21 to 22.10. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Jess, John. Florida's Gulf Coast bracing for the impact of Hurricane Milton's winds and expected massive storm surge. The storm could bring destruction to cities and towns already reeling from Helene's devastation just 12 days ago. Almost the entirety of Florida's west coast is under a hurricane warning. Florida Governor Ron DeSantis.
We currently have 5,000 guardsmen that are mobilized for the response to this storm, and we have more than 3,000 additional guardsmen who will be mobilized prior to landfall.
Milton, that was a Category 5, weakened to a Category 4 storm overnight with 155-mile-per-hour winds. Rob Carolyn will join us in a few moments to talk more about Milton. A Trump event marking 1 year since the October 7th terror attack on Israel at the Doral National Golf Club in Miami Monday. Former President Trump again attacking Democrats over the rise in hate crimes with more unfounded claims.
We will remove the jihadist sympathizers and Jew haters. We're going to remove the Jew haters who do nothing to help our country. They only want to destroy our country.
Second Gentleman Doug Emhoff recently said Trump is gaslighting the public with his comments about anti-Semitism. In Washington, Vice President Harris and Second Gentleman Doug Emhoff marked the first anniversary of the October 7th attacks by planting a pomegranate tree at the vice president's residence, a symbol of hope in Judaism.
I will never forget October 7, and the world must never forget.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, John.
Michael Barr, thanks so much. I have enjoyed face-to-face with not a hockey goal storm surge, but I would suggest a 3-foot storm surge is a 45-foot sailboat was coming at me. The boat didn't end up in my living room because the electric utility lines got caught in the mast. Joining us now on the reality of this, and he's lived it time and time again, is a pro. Rob Carolyn is a surveillance meteorologist. Rob, I'm in awe of the power of nature that we're seeing. Is it just the water temperature, or is there something else going on?
Well, it's the Gulf is balmy, Tom, and what was really important is these compact hurricanes have the ability to get very strong very quickly. They can also weaken very quickly, but Milton is a very small, compact hurricane. It's very reminiscent of Andrew back in the early 90s. Wow. That was another small hurricane that decimated Homestead, Florida. This has weakened some overnight. It went through an eye wall replacement cycle, and what happens when they do that is, so the storms weaken, but their circulation starts to expand. So what we're going to see, I think, when the Air Force gets into this system later this morning, is that the hurricane force winds are going to be out further than 30 miles from the center of circulation. The circulation is going to start to broaden as we head through the next 24 hours.
Rob, with great respect, you nailed the amount of precipitation in Helene. I have the clearest memory of that, a number of days ago. Do we get the same rain this time?
No, we don't, because we're not going to be seeing the same type of setup. The problem with Helene was a stalled front in the Appalachians, plus you had orographic uplift. Florida's relatively flat. The system's going to be accelerating as it moves across Florida, so that should get the rain out fairly quickly. The areas that end up with the most rain from Milton are going to be in South Florida, where they've got showers and thunderstorms now well in advance of the system. I think the worst rain is probably 5 to 10 inches with Milton as it works its way across the Florida Peninsula late Wednesday night and into Thursday morning.
And you know what, Rob, I definitely grew up on the Gulf Coast. So I know how serious this can be. What's the timetable for landfall in Florida?
Right now, looks like, Jess, the storm will be moving inland somewhere in the Tampa Bay area late Wednesday night. The really important thing is, where does the center cross the coast? If the center moves across St. Petersburg, that's the worst-case scenario for the Tampa area, because what it does is southwest winds push the Gulf of Mexico right into Tampa Bay, enhancing the storm surge. If the system passes south over Sarasota, the wind direction is in a completely opposite direction and actually pushes Tampa Bay out into the Gulf. So folks in the Tampa area are hoping for a hit on Sarasota. Right. Folks in Sarasota not looking forward to that.
Jess Menton, were you ever in one of these big storms?
Growing up, there was a number of them. So Hurricane Rita was pretty devastating. So that was back in, I think, 2004, 2005.
Rob, can I ask you a sensitive question? Jess Menton keeps rebuilding on the coast of Florida. Puts the house up, it gets blown down. When are we going to learn that if we build fancy properties, we have to stop doing it because of these hurricanes?
Exactly, Tom. What really should happen, and I know, it's great to go to the beach and look out and see the ocean. I think what you're probably going to start to see is either the state or the federal government get involved, just start buying these properties up and turning them back into barrier islands.
Rob Carolyn, thank you so much. I'm sure we'll speak to you again. Our Weather Without Hysteria, Rob Carolyn, Bloomberg meteorologist. Bloomberg Surveillance This Morning with Jessica Menton. It's brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest costs, global trading, and turnkey custody solutions. No ticket charges, no conflicts of your interests at ibkr.com/RIA. Torsten Slok with us with Apollo Global Management. We continue a good conversation here. Torsten, if we don't get the rate cuts so many people are modeling, what does that do to our economy? Is it something that we have to work out and work through? Or is it just another day at the races and we normalize at these levels?
I like that description, another day at the races. So I do think that this is a very fundamental question, namely, if monetary policy really is restrictive. The Fed keeps emphasizing and saying the Fed funds rate, which today is about 5, and in the long run, we're going to down around 3. Well, given 5 in interest rates is higher than 3, then the definition, according to the Fed, must be that the monetary policy stance is restrictive or constraining on economic growth. But that's not what non-farm payrolls of 254,000 is suggesting. That's not what a declining unemployment rate is suggesting. That's not what a declining default rate for levered loans is suggesting. So if it really were the case that monetary policy was restrictive, as the Fed has been arguing, why is the incoming data then still good? So therefore, Tom, to your question, if they do not cut, we should expect that these tailwinds from AI investing, from energy transition, from the CHIPS Act, the Inflation Reduction Act, the Infrastructure Act, government spending, and generally less sensitivity to interest rates for consumers and firms because they have locked in low interest rates. We should expect these things to still provide a tailwind and therefore make the U.S. economic outlook stronger than what we see elsewhere in the world because of these idiosyncratic forces that we're seeing in the U.S.
After that blowout jobs report, Bank of America was making a call about how CPI is no longer a non-event, and the implied move right now in the options market for CPI day is about 1.1% in either direction for the S&P 500 versus about a 70 basis point move over the last 3 months on that day. So how vital is it when it comes to this latest report coming up in a few sessions here as far as what it means for the Fed's next rate decision?
Yeah, this is a really important question because think about it. For years, when inflation started going up in 2021, 22, all the debate was inflation, inflation, inflation. Now, when inflation there has come down much closer to 2, we're at 2.5 today. We were at 9 in 2022, so we are very close to 2 now. The pendulum swung back to, well, now you know what? It's all about unemployment because we can check off the box with inflation and say, let's not worry about that anymore. But because we now have this risk that inflation could potentially begin to move higher, it is almost as if the pendulum is about to swing back towards inflation again. As you're saying, that's not how markets look at Thursday's data that's coming out on the CPI. But it still is very important here that the different focus from the Fed sometimes is inflation. Now it's been unemployment. Well, now we're back to watching if inflation actually is on its way back to the 2% target, or if there's a risk that in particular, the 40% of the CPI basket that is housing, if that begins to move higher again, then we will certainly have much more focus back on inflation again.
And of course, when you're looking at the money market funds still being around records here, if rates do stay a bit elevated, what's the actual yield based on history as far as when you'd see money coming out of money market funds and more going into the equity market.
Yeah, and this is the real Sherlock Holmes mystery looking ahead, namely the more than $6 trillion in money market funds. A lot of that money came into money market funds because the Fed funds rate went up. Now the Fed funds rate is going down. So the question is, what are investors in money market funds going to do? Historically, they have gone into other types of fixed income, IG credit, some high yield, maybe some loans. But the question is, might they even take some of this and put it into equities if the Fed continues to lower interest rates? In other words, what is the risk willingness of that $6 trillion in money market funds? Where do they go?
Yeah, this is brilliant, Torsten. Jess, great question, because this is just the heart of the matter. But it's non-linear, Torsten. We just had a model. What did you learn in the lower interest rate experiment of the last 12, maybe 16 weeks? What's a lesson you took away?
Well, I think a lesson is exactly something that we can get from what happened for the 14 years from 2008 to 2022 when interest rates were literally at zero. Well, in those situations when we had investors with a lot of money that gave much lower in return in rates, they began to chase yield. The hunt for yield, of course, resulted in a rally in a broad range of asset classes. And it also, in this case, will likely result when the Fed now embarks on lowering rates. What we're debating is the speed with which they're lowering rates, not if they're lowering rates. So even if they do lower a little bit slower, as I would expect, I do think that this will be positive also for credit. It will also be positive for equities. It will be positive for asset classes that generally benefit when interest rates move to lower levels. But what's most important in this debate is that we are not going back to zero. We will have, according to SOFR futures, the Fed funds rate at around 3 to 4% for the next 5 to 7 years. And that does mean that fixed income, including private credit, is looking more attractive because we had a very different environment when interest rates were zero relative to now when interest rates are between 3 and 4.
Torsten Slok, Michelle Bowman gets a massive victory lap. You grew up with the dissent of the ECB, the dissent of the Bank of England. Should we see more Michelle Bowman-like dissent at the Fed?
I do think that this is a healthy development. Not that they shouldn't all agree all the time, but I do think that in particular in this instance where we are exactly debating, well, maybe the 50 basis points cut, which was really justified by a recalibration. Remember, Jay Powell mentioned 10 times in the press conference that the reason why they did this was to recalibrate monetary policy, not because the incoming data was weak. I do think that there is now a healthy debate among FOMC members. We heard from several of them yesterday that, hey, maybe we should go a little bit slower. Maybe we should watch the data a bit more carefully. And I do think that, therefore, dissents are probably more pronounced feature of FOMC meetings over the next several quarters.
Can't wait, Torsten, for you to be appointed a governor. Mr. Slok is with Apollo. Thank you for the generous time here with hurricane interruption. Tom Keene and Jess Menton, Jess in for Paul Sweeney, John Tucker in for Lisa Mateo is well. And, you know, I look at, Jess, of what you've written here, and it was sell in May and go away. And then August 30th, it was like, OMG, just take off the next 30 days. And I got Jessica Menton. Ready, folks? October's turbulent history. Sounds like Greenspan. You're channeling Greenspan. October's turbulent history is back in vogue. Discuss.
Of course, Sam Stovall over at CFRA. He's like an encyclopedia of stock market knowledge. But of course, a lot of times you see that seasonality buck the trend. But October is known as the most volatile month of the year. Not the worst that goes to September, but that actually bucked the trend this year. The S&P 500 was up actually 2% in September. So basically what Sam was looking at is usually when you look at October compared to the other months, it's 34% more volatile than
Jeffrey
the rest.
Hirsch, thank you. Good morning, Jeffrey. Lovely with Stock Traders Almanac. He's under me in there. Quote, in election years since 1950, October has been weak from the start with some strength around mid-month followed by a second wave of weakness. Is that what everybody's anticipating?
Well, usually it has to do with mutual funds that have to do window dressing in October because they have a little bit of a different deadline than, say, individual taxpayers.
They don't window dress September 30 or 12/31?
So, no, it's actually more toward the end of, actually around Halloween, which a lot of people forget about.
Buy Apple because they all own their own Apple,
so those, And so that's why you see a bit of a pickup. So I know a lot of people want to talk about election and other things, but they're actually things that have to do with mutual funds that pick up volatility.
So our 401ks, John Tucker's 201k,
201
is window dressing right now?
I don't. JT, are you?
I'm trying to. No, actually, you know, it's a 401k now. It's performed.
You're killing it. Everybody else
30
at
years at
Bloomberg's
Bloomberg.
retiring. Now it's your chance.
Everybody's going to hate me, but index funds have been the way to go.
You know, we got to show some young photos of John Tucker for his 30th anniversary last year.
Did you?
Yes, it was very entertaining. We got to surprise him. Yes, there was evidence. We had a simulcast here.
There's no evidence of me. I was pickled like this when I was 30 years old. Jess Menton in trouble here in surveillance. We'll see if she continues into the 8 o'clock and the 9 o'clock hour. Program note, we're on YouTube. Subscribe to Bloomberg Podcasts out on YouTube. Before that, you got to commute. And on your commute, let's remember Android Auto, Apple CarPlay, and, of course, Sirius XM. Good morning on older technology. On the corridor in Washington, 99.1 FM, Nathan Radio, we call that, in 92.9 FM in Boston, and the flagship here, Bloomberg 1130 in New York. At 9:30 this morning, our Lisa Abramowitz in conversation with James Dimon of J.P. Morgan. Please stay with us. John Tucker, Jess Menton, anybody else new today? This is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. With this Bloomberg Business Flash, futures indicate a higher open on Wall Street. Dow futures up 64 right now. That's up about 0.2%. The S&P futures up 22. That's up 0.4%. NASDAQ futures 85 points higher, 0.4% rise. 2-year yield a basis point lower, right under 4, 397. The 10-year, that's above 4, unchanged, 4.02%. Among the movers in the pre-market, PepsiCo down close to 1% pre-market. They trimmed the revenue outlook for the year, blaming cash-strapped consumers, boycotts in the Middle East, and a major recall that hit volumes of its food and beverages. And Chinese stocks pulling back after gaining more than 10% today. With China disappointing investors, holding back from more major stimulus as it reopened after the week-long holiday. There's now some question about whether the Federal Reserve will cut rates at all next month. The Fed futures putting a 15% chance of no cut at all. And then Honeywell planning to spin off its advanced materials division, according to the Journal, to create a business that may be worth more than $10 billion. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Jess and Tom.
John Tucker, thank you so much. Had an uncle, he was a professor at Union College in Schenectady. When my father got angry at me, he'd say, spell Schenectady, which I never could do. Jennifer Lawless could spell Schenectady. She survived winters there. What was it like at Union College a few years ago, Jennifer Lawless?
It was so many years ago now, but it was snowy and cold.
It was cold. That's what I remember. On the Mohawk River, it was mostly cold. Jennifer Lawless out of Union and, of course, Stanford, and now holding court at the University of Virginia. She's absolutely definitive on the female species in our political moment. Professor Lawless, how is the Vice President of the United States doing in garnering the votes of women?
She's doing as well as most Democratic candidates do. Most people think that when there's a woman at the top of the ticket, there's a bigger gender gap. But the reality is that female voters tend to prefer Democratic candidates. Male voters tend to prefer Republicans, and the sex of the candidate doesn't matter that much in terms of vote choice. But what Kamala Harris is doing is really motivating women to turn out, and ultimately it's likely going to be a turnout election.
Which is the key female turnout? Is it the women of the suburbs of Philadelphia and Pittsburgh that we heard about 2 years ago and 4 years ago, or is it a different distinction of women that she needs to win?
I think it's two groups of women. It's the suburban women for sure, because in battleground states, they're often decisive. But it's also motivating young women who need to turn out if Harris is going to not only build up her popular vote, but also secure wins in tough states. And young people have traditionally been less reliable when it comes to turnout. So anything she can do to make sure that young women are enthusiastic will be very helpful on Election Day.
So which states are going to be most crucial for the female vote?
Well, basically, the female vote is really important in all states, because when the Democrats are able to ensure that they have greater margins among women, they tend to win. So if she can up the female vote, if she can increase her margins in blue wall states like Michigan, Wisconsin, and Pennsylvania, as well as along the Sun Belt, those are two good paths to victory. Without a big advantage among women, it's hard to see that happening.
And as far as when it comes to those swing states, which ones do you think are most crucial? Because you named a couple there, but do you think it'll really come down to those?
I do. I think without winning Pennsylvania, it becomes very, very difficult to win the election, especially given the amount of time that she's been spending in Pennsylvania, that Walz has been spending in Pennsylvania, and Joe Biden's connections to Pennsylvania. So I think that's the most important state. And if she wins Pennsylvania or plans to win Pennsylvania, the easiest path to victory is then through the blue wall states of Michigan and Wisconsin.
Jennifer Lawless, I want to go back to your core research here, which is in so many other countries, we seem to be very comfortable with women in any number of slots, whether representative, senator, even at the local level as well. You know, the work you've done at UVA, running for office is still for men. How did we get there? Why are we distinctive in this?
It's interesting. It's really a supply problem and not a demand problem. And by that, I mean that when women run for office, they generally fare just as well as men. They're just as likely to win their elections. They raise just as much money. Their media coverage generally looks the same. And keep in mind, in 2016, Hillary Clinton did win the popular vote. So voters, donors, and the media seem okay with women. The problem is that women are still significantly less likely than men to emerge as candidates and run for office, largely because they perceive that there's widespread systematic bias against them. And so it's sort of a chicken and egg problem. If we don't have enough women out there, we can't normalize it for more women to start emerging.
So what do you think ultimately needs to be done in order to fix that?
Two things. The first is political recruitment. When women are encouraged to run for office, either by a party leader, elected official, or political activist, but also by a family member, colleague, or friend, they're far more likely to give it serious thought. And if you don't think about something, you're not going to do it. So that's an important first step. And the next thing that we have to do, I think, is convey the reality that when women run, they are just as likely to win. We hear high-profile stories about gender bias and discrimination all the time. And those things are true, and they do happen. But part of the reason that they're newsworthy is because they're rare.
Professor Lawless, I believe in the Wall Street Journal today, I don't have it in front of me, there was a pithy article about Democrats in Michigan basically saying to the vice president, let's go lose the media dash and get up here and campaign. Where do you stand on that? Does the vice president, President Trump has a mode, he has a model, and he grinds it out every day. Is there a mode, is there a model to Harris, or does she need to shift now 20x days before the election?
I think she's got to walk and chew gum. We saw in 2016 that Hillary Clinton wasn't campaigning as actively as a lot of people thought and turnout wasn't where it needed to be. But we've also seen people like Joe Biden take a hit for avoiding tough questions by journalists and doing these media tours and blitzes. So I think the Harris campaign is trying to do both, and she's got 28 days to demonstrate that she's able to do it.
Jennifer Lawless, thank you so much. Greatly appreciated this morning with the University of Virginia. She's just built a cottage industry of incredibly intelligent research on the uniqueness of American politics that we're all living right now, whatever your political beliefs. Jennifer Lawless, she's at UVA. We'll do much more on this theme here as we go to the election. Jessica Menton and Tom Keene with you this morning. Let's talk about the markets right now. I want to walk through a data check. We've got this time here. Equities lift, and levels are important. On closing, just under 42,000, Dow 5,700 on SPX. NASDAQ 100, just under 20,000. We've barely given any back, even with a VIX move from 16 to 21.95. The money question on Global Wall Street, Jess Menton, is a VIX of 22 elevated?
Right. So if you're looking at what the options market is pricing, especially hedging, if you look at the SPY that tracks the S&P 500 in the ETF space, you're seeing that hedging is costing a little bit more than it had been. Obviously, a lot of traders got burned last year because the rally kept going. But even coming into the new quarter here, the final 3 months of the year, the S&P 500 is basically its best start to a year since 1997. There was a story that I wrote about that recently. And so you can see how strong everything was coming into this month. So now when you're heading closer to the election, though, you're seeing the cost of hedging is getting a little bit more expensive.
What are bears doing? Are they? I mean, I see the bears. They all come out on Friday to get through the weekend. But are they? I don't see a lot of capitulation.
No.
The major houses, I see that they'll lift up, and that costed at Goldman Sachs is 6,300 this week. But what do you see in bear behavior right now?
Right. And so JP Morgan actually has the lowest Wall Street sell-side target on the street of 4,200. And it stayed there. They've had that for about 2 years now. Whereas if you look at BMO, they have the highest target around 6,100.
Well,
exactly. Well, there's you have the perma bulls obviously being more optimistic here going into year end. But if you look at the positioning, we were talking about utilities earlier in the tear they've been on this year. But not just that, the positioning has been elevated more to those income-driven bond proxy-like sectors like utilities, real estate, consumer staples in recent months, just because they were trying to front run that even ahead of the Fed's July decision before obviously they ended up cutting rates in September. So now you're starting to see that a little bit stretched, because after the S&P 500 and the NASDAQ 100 did peak back in July, you saw that positioning come down for tech and growth stocks, but now you're starting to see that creep up again here. So the bears being a little bit caught off sides.
Caught off sides have been absolutely crushed. I mean, it's amazing to me to see this. We'll talk more about this. She's a font of equity wisdom. She doesn't know, John, I'm in the triple leveraged all cash fund.
And how's that worked out for you?
Oh, it's worked out great. Talk about a flat line. Sonali Bassick with Ray Dalio. We'll do that in the 9 o'clock
It's going to be great.
hour. With our news in New York City, Michael Barr.
Thank you very much, Tom. Jess, John, evacuations are underway in Florida as the Tampa area prepares for Hurricane Milton as it moves across the Gulf of Mexico. This woman says she sat in bumper-to-bumper traffic to leave St. Petersburg and get out of the storm's path.
We actually took 8 hours just to get out of the state of Florida. So the first 60 miles, it took us 4.5 hours to go 60 miles.
Milton weakened from a Category 5 to a 4 overnight with 155-mile-per-hour winds. Vice President Kamala Harris is accusing Donald Trump of playing political games with the hurricanes. Harris spoke before boarding Air Force Two.
There's a lot of mis and disinformation being pushed out there by the former president about what is available, in particular to the survivors of Helene. And first of all, it's extraordinarily irresponsible. It's about him. It's not about you. And the reality is that FEMA has so many resources that are available to folks who desperately need them.
Both presidential candidates marked 1 year since the deadliest attack on Jews since the Holocaust. Donald Trump held a remembrance event at his Doral Golf Resort in Miami.
The anti-Jewish hatred has returned even here in America, in our streets, our media, and our college campuses, and within the ranks of the Democrat Party in particular. Not in the Republican Party, I will tell you that. It's not in the Republican Party.
Earlier, Vice President Harris planted a pomegranate tree in memory of the victims at her official residence in Washington. She said the world must never forget October 7th. Finally, scientists John Hopfield and Geoffrey Hinton have been awarded the Nobel Prize in Physics for discoveries and inventions that form the building blocks of machine learning. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Tom, Jess, John.
Good morning, Bloomberg, 11:30 a.m. in New York. For those of you across the country, there's the idea here, the dreaded New York Yankees may not make it back, Michael Barr, from Kansas City. It's best 3 out of 5. They go there for 2 games. What happens to the Yankees if do they finally blow up the team? What's the finally here if the Yankees crater in Kansas City?
Well, now I know Yankees fans here is like, oh, we done lost the game. And
they're like
let's
the
calm
Cowboys.
down. It's just a game.
Okay,
and they can bounce back.
Do they assume that Soto won't be here next year? Juan Soto is.
That's a strong possibility.
That's a strong possibility.
Yeah.
I'm fascinated by it. I mean, I've watched some Kansas City ball this year. They play old school ball. They are, Earl Weaver, we need a 3-run homer. We can figure that out.
And they looked good yesterday.
They did. Yeah. But, I just want to, you following this? Jess, you follow
Well,
baseball? Excuse me. We're from College Station. We don't follow baseball.
No, I was going to say I grew up an Astros fan, but I feel like it's controversial now to bring that team up. So, closeted Astros fan.
Do I look okay in my Texas A&M bow tie today?
I have to say, it's fabulous that you decided to wear a Texas A&M bow tie
Just
the day
for
that
you.
I'm. Thank you. What an honor.
Good morning to Robert McTeer, who was at the Georgia Federal Reserve System and went over and did a lot for Texas
amazing.
A&M.
I love it.
In honor of Jess Menton, I wore my Texas A&M.
I feel so honored.
Well, she had a tantrum. Her people called up this morning and said, "We're doing Texas music," and they said, "You mean Joe Weisenthal?" And I said, "No, we'll get some."
Yeah, that's right. Joe went to college in Texas.
Joe would good.
We went to rival schools, though.
Sweet crude. I could see light sweet crude down at Dixie Chicken. Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Futures higher. All 3 major indexes dropped about 1% yesterday. Tech stocks leading the declines in yesterday's session. After surging almost 11% in the opening minutes of trading, stocks in China ended the session up almost 6%. China says it's confident in reaching its economic targets this year, but policymakers, they held back on any further stimulus. PepsiCo trimming its revenue outlook for the year. The full-year organic revenue now expected to rise by a single-digit percentage. And shares of PepsiCo pre-market, they were down under 1%. Berkshire Hathaway continues selling Bank of America stock. Regulatory filing shows in its 14th round of disposals, Berkshire eclipsed $10 billion of total proceeds from whittling its stake in the second largest U.S. bank. And the Journal reporting Honeywell International expected to unveil plans to spin off its advanced materials division. And right now, the Dow futures up 62, S&P E-mini futures up 21, the NASDAQ futures 88 points higher, 2-year yield 2 basis points lower. That's at 396, and the 10-year is just under 4%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Jess and Tom.
John Tucker, thanks so much. Greatly appreciate this. Bloomberg Surveillance, the Jessica Menton Show, is brought to you by Interactive Brokers Trade. Over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. Okay, here's the dirt, folks. Balchunas is such a stud that he shows up and he puts his name on a story. And meanwhile, the mechanical engineer out of BYU, Rebecca Sin in Hong Kong, is doing all the heavy lifting. We tried to get Miss Sin to come on, but it's like evening time there and night and that. So Eric Balchunas joins us on you catching up in China. Eric, you got to be kidding me. I mean, you and Rebecca put together this must-read. Can you legitimately invest in China through ETFs?
Yeah, absolutely. I mean, well, so right now it's wild over there. I want to say Rebecca is doing all the work. Her and Jack Wang are killing it over there.
Yeah.
They were really early pointing out that a bomb of stimulus was coming. Like months ago. So it happened. The market really rallied, especially foreign investors buying this past week. China was closed. So you had like a lot of premiums in the ETFs there. All of it was foreign because investors love QE. Who doesn't, right? So the market went up. She put a note out today saying, okay, great. There's a lot of FOMO, but be careful. The next stimulus may not be as robust as the one that just happened. So it's always good to exercise a little caution in situations like this. But the numbers of the China ETFs are through the roof. Like we're talking record month, and it's only been a week in October for investors here wanting to get into the action over there.
Could you buy leverage there? I mean, is there such a thing as a triple leveraged Beijing fund?
Yeah, well, and it depends. Not triple. In Japan, they have some of that. Leverage is pretty popular in Asia in general. Those retail investors love to gamble. Here, though, we have this ETF called Yin. It's Yin and Yang. It's 3X and negative 3X. Yin has taken in $1.3 billion in the past week. Tom, it's 14 years old. Its record week before that was 80 million. So we're talking like 13, 14 times its record. It's now the fourth best returning ETF. It was probably bottom of the list, like 3,000th 2 weeks ago. So this is a really unusual situation of a complete surge.
So who are the top foreign investors that are buying these Chinese ETFs?
Oh, man. So you look at everybody. So we know this because like FXI, for example, the institutions love that one. Advisors don't like it because it's expensive, but it trades a lot. So the hedge funds and the institutions are buying FXI. I think it was fifth in flows in the past week. But then you've got MCHI, which is popular with the advisors because it's cheap and it covers everything. That's seeing a lot of flows. And then you've got the retail degenerates who love Yin, which is 3X China. And as I just said, that was like 13 times the flows. So this is like a party with everybody, trying to get in at the same time. But what's interesting is the rally today started off strong and then faded a little. So what happens in China is obviously important because are the locals going to buy in just as fast as all the foreign investors?
So you have hedge funds, institutions, and even retail going in on this. But is it any sort of foreign as far as a forward-looking indicator when you have hedge funds and positioning?
Yeah, well, the thing with ETFs and why institutions love them is they're anonymous. I don't know who's behind the volume until the 13Fs come out, but you won't know that for like 3 months. So I don't know. I do know that some of the trades have been pretty big. So you look at the size of the volume. And anytime the volume gets big, and we've seen record volume, clearly retail can't make up all that volume. You have to have some big fish in there to reach those record volume numbers. But this is where the art of analysis comes in. And when you wonder, if you want to know what the hedge funds and the pros are doing, watch FXI. That's the one they use. It's the old school one. A lot of the more long-term investors are off that one because it's more expensive. It doesn't cover the market as well. But the pros love it because it's just super liquid.
Eric, give us an update on the Bitcoin frenzy. You know where I sit on this, and nobody needs my opinion this morning. But into the end of the year, Eric Balchunas, are flows ebbing into BitDog?
Yeah, so my phrase with Bitcoin ETFs, and I guess Bitcoin itself, is two steps forward, one step back. So there was a big step back recently, but they took a big step forward with about over 1 billion in a week. So I would say, though, since July, it's cooled a bit. It's not as intense as it was in the spring, but we're still looking at about almost 19 billion in net flows year to date. And we'll see. You know, was just looking at BlackRock is out there, you know, talking to all their big clients. You've got the wirehouses like Morgan Stanley, UBS, Wells Fargo are just now onboarding it and letting advisors solicit it. So that's big. So you've got a couple catalysts coming up, and also the options. Options on Bitcoin ETFs will probably be available Q4.
Eric, you're killing. It's way too early in the morning. Are you kidding me, Eric? Are we doing derivatives on Bitcoin now?
Yeah, I mean, people are clamoring. Yeah, so the SEC approved them. So now we got the CFTC has to okay them, but everybody thinks they will, but it'll probably happen late Q4 or Q1.
So, you know what? You had mentioned BlackRock, though, Eric, and I know that BlackRock and Fidelity, they were dominating those Bitcoin ETF flows earlier this year. Is that still the case with those firms? Absolutely, yeah. BlackRock is, you know, we asked when this race started, who will be the GLD of Bitcoin? It is IBIT. BlackRock has become the one. Fidelity.
Eric, I'm running out of time. This is too important. You're having a beverage of your choice with Lawrence Fink of BlackRock. And he says, Eric, what do I need to worry about? What does BlackRock need to worry about, Eric Balchunas, as they go all in on Bitcoin ETF?
Well, it is such a small sliver of Larry's whole world. That's what I told the crypto people. They think this is such a big deal. It's a nice hit, but it's 0.01% of their revenue. So Larry is doing everything right, in my opinion. To compete in the Vanguard era, you have to hustle your butt off and go everywhere and try everything pretty much and try to get new revenue streams. So I just think he's just opportunistic, and you have to be to compete with Vanguard. And BlackRock's the only firm that competes with Vanguard regularly and does it well.
Eric Balchunas, thank you so much. You see out on the road flogging ETFs. Can't say it's a must-read. Look for Rebecca Sin on Bloomberg Terminal, Bloomberg Intelligence, with seriously really, really good work on the Pacific Rim ETF world. We'll continue our discussion on it, I'm sure. Nobody cares about my opinion on BlackRock and that.
We know how you feel about Bitcoin, Tom.
You got through the first hour. You okay?
I feel great.
Yeah,
it's been so much fun. Hopefully you get to keep me for the next 2 hours.
We're doing it. Can we talk 5-0 Aggie football?
That's right. We moved in the AP full from 25 to 15 now.
To 15.
That's right. Making progress after a little bit of a tough start to the year, but now we're turning things around.
The end of the year is brutal.
It really is. I mean, the Tide dropping from number 1 to 7.
The Tide. That's Alabama for our international audience. We'll have to see that.
That's a shame.
You were in College Station, Texas, and it's I'm affiliated with my father. You got to have Texas music, and it's like, I-35 Dallas down to Austin. We can find a world we can get lost in there.
I-35.
Where we can breathe air. Oh, it must be Keith Urban.
Oh, I love it. Look at this. I feel special.
I know a place where the people smile, taking it easy, and it's been a while since I've gone, and now it's time to go home. Give me a tight t-shirt on a real hot body, you know what's on my mind. Yeah, I'll show you where it's at. Come on, let's get back on deck.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. Mateo out, Barr in, Sweeney out. I think I'm in today. We'll have to see. Jessica Menton sitting in for Paul Sweeney here this morning. It's a Tuesday before an inflation report that we get out to Wednesday. We'll talk to Jeff Rosenberg about that in a moment with BlackRock. They give Torsten Slok in the first hour.
That's right,
and
two segments.
Two-segment, half hour with Jeffrey Rosenberg is going to be, it's a real treat. We'll do that for you here in a moment. Been having fun with Jessica Menton as she grinds out market coverage. Explain what your job is at Bloomberg. It's a mystery, folks. Her desk is the farthest desk at our world headquarters from the food court. She goes up there. She's got armloads going back down.
That's right. I had to come in with so much for her.
What do you do at Bloomberg?
So I am the deputy team leader for the U.S. equities team. I'm also a senior reporter. So I have kind of a dual role here. So I help manage the U.S. equities desk. I also write the enterprise stories for our U.S. stocks team.
What's an enterprise story?
So more of the big kind of stories, sweepy stories that we do on the weekends, following kind of big events and sort of setting up the next week ahead and what traders need to watch.
So what's your enterprise story in Pepsi this morning?
That's right. Well, that's a big thing because actually it ties into the Fed and Tom Barkin from the Richmond Fed.
Soda, Pepsi, Coke, no Pepsi does not tie into the Fed.
No, it does. Tom Barkin's talked about how he watched price mix and volume for a lot of the consumer packaged good companies. So PepsiCo actually is one of them. I talked to him about this about 6 months ago.
She's telling me what she's putting me in my place, John.
Yeah.
That's what we do here, the gals from Texas, you know?
You get your head handed to you.
I wear my Texas A&M bow tie. Be nice. Same colors as Carnegie Mellon.
That's
Bloomberg
right.
Surveillance this morning, brought to you by Cohn Resnick Advisory Assurance Tax. Is your business future ready? Talk to Cohn Resnick's digital advisory team about strategies, about platforms to drive competitive advantage. From the Interactive Broker Studios of Bloomberg Business Flash, John Tucker.
All right, futures right now, they are higher after yesterday's 1% sell-off. Traders turning their focus to inflation data later this week with the CPI. After a 1% sell-off yesterday, as we say, U.S. futures, again, they are higher. S&P futures up 25. The Dow futures up 76 points. NASDAQ futures 108 points higher. Traders also pricing a rate cut of less than 0.25% at the November meeting, though they still see about 48 basis points of policy easing by year-end. U.S.-listed Chinese shares dropped sharply after surging almost 11% at the open. The Chinese stocks lost nearly half their gains. Hong Kong shares had their worst day since 2008, falling almost 10%. China not providing any specific figures for additional stimulus in the works. And PepsiCo, as you mentioned, says its customers, they're getting squeezed. The full-year organic revenue now expected to rise by a low single-digit percentage. Shares down about 0.7% pre-market. And Findlay Partners, whose fund has outperformed 86% of peers, sold down its stake in NVIDIA to zero in the third quarter. The asset manager also reducing its stake in Microsoft, its biggest position for much of the past decade. Two-year yield right now just about 3 basis points lower, 3.96. The 10-year unchanged, just above 4.02%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jess and Tom.
John Tucker, thanks so much. I really can't convey enough the theoretical foundations of Jeffrey Rosenberg. He comes on the Fed day, he comes on other days, and for BlackRock, it's blah, blah, blah on the fixed income market, over to economics, even with a touch of equity analysis. But behind it is Minnesota, Wisconsin, and then on to Carnegie Mellon. It is rigorous mathematics behind the Jeffrey Rosenberg comments. Jeff, what part of your mathematics matters right now? On a basic equation of where we're heading, what's your number one focus?
That's a great question, Tom. And the answer is rate of change. And that's really what markets focus on. They focus on, much more than the level the rate of change. And that's really what last week's economic data and really before that was all about, right? The rate of change in the actual data, and as importantly, the rate of change in the revised data. And so that's really changing people's perspective about where this economy is and where the Fed has to be. And that's what you've seen in the bond market the last 2-3 days. And it's pretty violent, this rate of change.
To me, what's important here with first, second derivative Newtonian mechanics is a basic idea, Jeff Rosenberg, that it's simple chug and plug. I mean, what does Jerome Powell need to plug into the equation to lead us to some stability for, dare I say, a vision out to late 2025? What does he need to do?
Yeah, it's an interesting question because there is a lot of, kind of taking the SEP forecasts for growth and inflation, plugging those into a formula, various variants of the Taylor rule, and determining whether or not the Fed's policy, excuse me here for a second, is overly restrictive. And the problem is the inputs to those formulas, they change, right? And that's a big part of the recent, kind of reassessment here in the bond markets, really all the financial markets, that the data has been revised, and the data, particularly on labor markets, the data in terms of the consumer and the broad economy, the debate between GDP and GDI basically was settled in favor of GDP being the right measure, meaning this economy is as strong as it appears and not this kind of sneaky weakening. And so the data going into those formulas is changing, and it's basically saying, the Fed is not as restrictive as it thought it was.
And so in that case, on the back of this latest jobs report and ahead of the CPI data later this week, what is speculative trading in the futures market for bonds telling us about the direction of yields?
Well, you don't have to look at the futures markets to see what the trading is saying. It's basically spoken pretty clearly here, and I think you highlighted it in the break a minute ago, that we priced out the expectation that we were going to have 350 basis point cuts in a row, and now you've backed off that pricing to November's 25. It's actually a little bit underneath the 25, and then another 25 in December. And so you're back to a little bit more of the bond markets aligned to what the Fed was saying, whereas before, and really much of the year, the bond market has been just very much aggressive, kind of overreacting. Obviously we came into the year huge expectations for a lot of cuts. We had to price that out given the inflation level. And then,
as we head into the final months of the year, how are you suggesting to clients, what do they buy, what do they sell in the Treasury market?
We've been, pretty adamant that the vulnerability in the bond positioning for most clients is what we've been seeing a lot in the flows. And what you see in the flows is this kind of knee-jerk reaction to the expectation of the commencement of the Fed's cutting cycle. And the knee-jerk reaction is, if the Fed's cutting interest rates, then duration is my friend, and I want to own the maximal amount of duration in my portfolio. I want to own the longest maturities out there. And that we've really been very much saying, you got to be careful. Number one, it's a little bit of buy the rumor, sell the news. The Fed cut 50 basis points and bonds lost money. So a lot of it was already in the price, and you had a lot of heightened expectations. And number two is that you just have a differential reaction along the maturity spectrum when the Fed cuts rates. It's mostly in the front end where you see that impact. And the back end can be affected by a lot of different things besides just the Fed cutting rates.
Jeffrey Rosenberg is going to come back with this, and I want to dovetail off the incredible interview we had yesterday with James Glassman. Jim Glassman, retired now at J.P. Morgan. Jim Glassman went to a school called Northwestern. I don't know if you've ever heard of it. It's sort of south of Minnesota and west of Carnegie Mellon. But Glassman was riveting folks about what we don't know about technology. And the blather that I was just doing with Jeff Rosenberg on Newtonian mechanics, certitude of taking, as a convention, 19th century math, and plugging in numbers is hazardous to your portfolio. It's how John Tucker got to a 201k. So we're going to come back with Jeff Rosenberg and broaden out the conversation to where Jeff Rosenberg sees technology, where Jeff Rosenberg sees productivity, economic stuff, and how that folds over into the certitude of all the mathematics that he and others at BlackRock deal with every day. Can you imagine Amanda Lynham and Jeff Rosenberg at a bar?
Oh, I'd pay money to see this. It'd be just a fly on the wall for that conversation.
It'd bring the bar to complete silence. I mean, it'd be amazing. We're going to come back with Jeffrey Rosenberg. Futures up 21. For Rosenberg, I got to quote the 10-year real yield, elevated 1.77% in this yield lift that we've seen over the last number of days. With our news in New York City, Michael Barr.
Thank you very much, Tom, Jess, John. Hurricane Milton has weakened slightly, but remains a ferocious storm that could land a once-in-a-century direct hit on Tampa. Almost the entirety of Florida's west coast is under a hurricane warning. It could engulf Tampa Bay late Wednesday with huge storm surges and turn debris from Hurricane Helene's devastation 12 days ago into projectiles. Kamala Harris has 3 media appearances today in New York, and that includes a conversation with the women of The View. The relationship between the U.S. and Israel was a key discussion point in Vice President Harris's interview with CBS's Bill Whitaker on 60 Minutes.
With all due respect, the better question is, do we have an important alliance between the American people and the Israeli people? And the answer to that question is yes.
Harris was answering the question on whether Prime Minister Benjamin Netanyahu remains a close ally of the U.S. Yesterday, Harris and Second Gentleman Doug Emhoff planted a pomegranate tree at the vice president's official residence to remember the victims of last year's October 7th terror attack in Israel. Donald Trump held an event at the Doral National Golf Club in Miami Monday. The former president, again, attacking Democrats over the rise in hate crimes with more unfounded claims.
We have to win this election. If we don't win this election, there's tremendous consequence for everything.
Second Gentleman Doug Emhoff recently said Trump is gaslighting the public with his comments about anti-Semitism. The Nobel Prize winners in physics were announced today.
The Royal Swedish Academy of Sciences has today decided to award the 2024 Nobel Prize in Physics to John Hopfield, Princeton University, USA, and Geoffrey Hinton, University of Toronto, Canada.
They were awarded the prize for discoveries and inventions that form the building blocks of machine learning. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Jess, John.
Michael Barr, thanks so much. Futures up 20 here, the VIX 22.03. Jess, an update on Mag 7, or even better, what are you and the team going to write on Mag 7 as you go to the inflation report on Thursday?
Well, we're also keeping a close eye on, obviously, Tesla's supposed to unveil its robo-taxi.
Are they Mag 7?
So they're technically in it, but they had, so the first half of this year, it was one of the worst decliners in the S&P 500. Then it rebounded last quarter more than 30%, but it's been kind of a tough start to this quarter. But technically it is, but it's the worst performing one of the typically the others.
It's not like a ginormous company. It's not like, ginormous.
If you look at we have in my G, which is where I save all of my charts in the terminal for reporters, so I can look at how I created kind of this index where I can look at what the PE ratio is for the Mag 7. So right now it's trading around at 37.
Is this a seminar for the Bloomberg terminal?
I feel like people would want to know where to
People
find
are driving off the Garden State Parkway. Jess Menton with us, I think, for the rest of the show. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Inflation data later this week may provide enough support for the Federal Reserve to keep cutting interest rates in the coming months. Futures this morning, they're higher after yesterday's just about 1% sell-off. Dow futures up 48, the S&P E-mini futures up 22. The NASDAQ futures 88 points higher. And in pre-market trading, you have shares of Supermicro Computer. They're up 5.3%, rising after the shipment data suggests robust demand for its servers. Honeywell International also gaining. The Wall Street Journal reporting the company plans to spin off its advanced materials division. The CEO there is trying to simplify things. PepsiCo lowering its organic revenue forecast for the year. This after consumers continue to pull back on buying its snacks and drinks. Globally, PepsiCo says it raised prices 3%, and Hong Kong's benchmark plunging more than 9%. Other Chinese markets gave up much of their early gains. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jess and Tom.
John Tucker, thanks so much. What a joy to talk longer with Jeffrey Rosenberg today, like we did with Torsten Slok earlier, for all of you on Global Wall Street and your commute, on Apple CarPlay, Android Auto, on the corridor, Washington, New York, Boston, and of course for all of you on YouTube. This is a real treat. I'm going to go a little mathy here, math warning. And Jeff, it goes off of what James Glassman said yesterday, retired from J.P. Morgan, about the technology overlay. All the work you've done, Jeff, and how it folds into the bond market is off of a productivity analysis, off of technology. And I would suggest off the foundational Cobb-Douglas function, which has some exponents. It's got some Greek letters in it. But there's a big, fat, ugly A at the beginning of the Cobb-Douglas function. And that's sort of like, where are we now? Well, it's like, okay, this is the technology. This is the economy. We're going to do the math, but we really don't know where are we now. How blind are you, Jeff Rosenberg, in working in fixed income at BlackRock because you don't know where we are right now on productivity or technology?
Yeah, the Cobb-Douglas production function. We can measure what goes in and we can measure what comes out. It's the magic inside that we don't know about. That's total factor productivity. It's interesting, Tom, you talk a lot about, the math and the science that we use. And a lot of the math and the science that we use is the mathematics of uncertainty, right? It's using probability and statistics and risk models to try to quantify uncertainty, because that's really what it's about. The Cobb-Douglas function is nice. It gives you a very certain form with a very uncertain input. And that's a lot of what we see in kind of the mathematics of economics, is that there's a proposal of how the economy works. And it's very nice and clean. The problem is a lot of the inputs are unknown. And that's really what we're dealing with, whether it's kind of the role of AI, the role of technology in changing total factor productivity and our inability to measure that, or other things that we were talking about before, in reference to the Taylor rule. The other, kind of big uncertainty is, the real neutral rate. We don't know what that real neutral rate is, or something even more, kind of basic, which is we measure economic data that we think we know with certainty, like growth and inflation, or payrolls or employment. We measure it with error. So when there are revisions, there's a lot. So it's really about dealing with that uncertainty. And I think on this technology issue, we really just don't know. What we really see in terms of technology, the impact is this first phase, which is the investment side, and the tremendous kind of infrastructure build out. But it's really kind of the second phase, which is the services on top of that. And then the third stage, which is you have the services that are expanding the impact of that AI, that really builds into that fundamental game shifter that many are talking about here, is the potential for AI to shift upward the total factor productivity. But to say that's in the economic statistics today, I think it's too early for that. What we clearly see is this first phase of the investment spend.
I can't emphasize enough, Jess, and everybody knows where I am on this, as L. Arian would say, the unknown unknowns right now that Jeff brilliantly laid out there. The financial media, I'm as guilty of this as anyone. We are certitude 101. We believe the 10-year yield. Baloney. I'm sorry, we have no clue when you look at these variables like technology.
And this time a year ago is actually when the 10-year Treasury yield spiked around 5% to that level there. If you look now, it's trading at around the 4 level after being around 3.6. But of course, if you're looking at the Atlanta Fed GDP Now model, it's around 2.5% for the third quarter. So I'm curious, why had bond yields continued to creep lower this year despite sturdy economic growth?
You know, they went lower on a number of factors. The biggest thing, you know, was this fear, this slowdown, right? I mean, we had a lot of conversation about the unemployment rate ticking up, the SOM rule predicting a recession, a lot of recession fears, and that, you know, pushed, and we got, I would say, the kind of impact on that was, you know, the big 50 basis point start of the cutting cycle is very much built off of this kind of legacy of the late summer. Slowdown in the labor markets. And now when we look back on it with the revisions and the data, the residual seasonality story around initial jobless claims, you know, it's all kind of pointing to maybe this labor market was a lot tighter than we thought it was. But I think the big drop in the yields was because we had this recession fear and the jobs market and the labor data kind of supporting this notion that the shift from the focus on inflation to the shift on securing the soft landing meant the Fed had to be very, very aggressive. Right. And that's where you got yields coming down so aggressively.
And do you still see and are keeping your call of 225 basis point rate cuts for the remainder of the year? For obviously we have 2 more meetings left in November and then in December.
Yeah, I said that kind of at the end of Friday, post payroll, that, you know, the easy call was taking the 50 out for November. I think they're going to want to stick with 25 and 25. Obviously, we've got some more data between now and then. And, you know, critically Thursday, this inflation report, you know, we've moved inflation to the secondary category of importance because of the, I would say, erroneous belief that the attainment of 2% is just a given. And so I think if you had some surprises on inflation, you can't really predict that. That's the definition of surprise. You know, you could change the narrative around the 25. But right now, not knowing, you know, whether we're going to get that, I think the Fed's going to try to continue to deliver on 25 and 25 in November and December. And that's where I would, you know, be expecting. But, you know, the data changes, we're going to have to change our minds.
Jeff, this has been brilliant. Thank you so much. Jeff Rosenberg with us at BlackRock with some deeper thinking there on like how you plug in full faith and credit market into the spread market and that. And Jess Menton, is you mentioned, and Lisa Abramowitz, she's with Dimon here. Abramowitz and James Dimon at 9:30-ish from London. We're looking forward to that. But
it's going to be great.
As Lisa mentions, and you mentioned too, you bring it over to the corporate market, and the answer is price up, yield down. And there's no other discussion. That's what we've seen.
Right. And there's also been a couple different technical levels that traders are watching on yields, particularly the 10-year around 3.6 and 3.8. So it's broken above that. So there's a little bit of room for potential movement even further above 4% where it's trading around now. So we'll have to keep an eye on that.
We'll have to see. We welcome all of you out on our distribution today on radio, on your commute, Apple CarPlay, Android Auto, and on Sirius. Good morning, 99.1 FM Washington, Bloomberg 1130 in weather perfect New York City. I really can't say enough about the weather recently. And our thoughts to Florida. Rob Carolyn with us here in 45 minutes on Hurricane Milton. And we'll have to see really grim news from Rob in the 7 o'clock hour. And we say good morning, of course, 92.9 FM in Boston. Thank you for that. And some nice comments from the New England crew as we change your morning commute, we hope. And then, of course, over to YouTube. Subscribe to Bloomberg Podcasts out on YouTube. That's the best way to get us. You go in, YouTube, Bloomberg Podcasts, and we're there. It's a picture of Lisa Mateo with 3 losers. And it works out as well. Jess Menton, Leland Miller on China at 8:30. That's much. I'm looking forward to that.
It's going to be fun.
You know, Leland Miller, folks, with the granularity of China Beige Book off of their holiday surge in the market, and then China pulled back sharply after that initial surge. Thank you to Torsten Slok for wisdom on China as well. Futures up 22. This is Bloomberg's Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. U.S. futures indicate a higher open on Wall Street. All three major indexes dropped about 1% yesterday, with tech leading the declines. And after surging almost 11% in the opening minutes of trading, stocks in China ending the session up almost 6%. China says it's confident in reaching its economic targets this year, but policymakers, they did hold back on any further stimulus. PepsiCo trimming its revenue outlook for the year. Full-year organic revenue now expected to rise by a low single-digit percentage. Shares pre-market are down just under 1%. And Berkshire Hathaway continues selling Bank of America stock. Regulatory filing shows in its 14th round of disposals, Berkshire eclipsed $10 billion of total proceeds. And the Journal reporting Honeywell International expected to unveil plans to spin off its advanced materials division. The business could be worth more than $10 billion as a separately traded public company. Dow futures up 45, S&P futures up 20, the NASDAQ futures up 73. 2-year yield 398, unchanged. 10-year yield up 2 basis points, 4.04%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Jess and Tom.
John Tucker, thanks so much. Brent crude, $79.40, down $1.53 for those looking at what's going on in the Eastern Mediterranean. Bloomberg Surveillance and all of our economic coverage, it is led by Commonwealth. Thank you, Commonwealth. Thank you for hosting Paul Sweeney and Alex Steele down in Orlando, our economic indicators with Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. On China, this is not only the conversation of the day. Lean forward. This is the conversation of the month. Leland Miller out of UVA, wonderful pedigree, invented China Beige Book, which is forget about the headlines in the South China Morning Post. Let's look at the granularity. Leland, I'm going to rip up the script. Do you observe protest in China? Protests that we don't see?
You know, there is dissatisfaction when and there is pushback against the leadership. A lot of people don't like what's happening over there with the economy and sentiment falling. I don't know if it's protests writ large. I'm not seeing anything that would reflect, Xi Jinping or the Communist Party being in trouble. But look, it's the pressures that are underneath the system that we don't see that are ones that are the most worrisome. So, you see when you look at our indicators, you see consumer sentiment falling and
right.
household sentiment falling and corporate sentiment falling. You know that there's a problem there, and they feel it. The question is how much much is there underneath the surface.
The model that you studied in school, and I lived Leland, I was standing across the Bund near the Grand Hyatt. There was like this one hotel, folks, in a lot of field. And Leland Miller, their model was to bring the troops in from the provinces and keep them employed building China. Does Beijing have that opportunity still, or do they have to find a new calculus to employ the millions?
Well, they've got the demographics, going into the future means they're going to have a lot fewer workers and a lot older workforce. So there is an issue with employment, but I think that the issue of the day with employment is that most folks graduating college, most young people graduating college, don't want to take the jobs that are open to them. So, they looked at the tech firms, they looked at these exciting opportunities to make some money, and those opportunities have gone away. And what she wants to do is usher them into the manufacturing workforce, which they don't want to do. So you have a major mismatch in the labor force between jobs that are open and jobs that people want. So that's just another level of complication.
And on the back of this, of course, China's the world's second largest economy behind the U.S. And the government, of course, did excite investors recently by encouraging those banks and to lend more, especially when it's buyers of stocks as well as real estate. But when you have officials refraining from promising more stimulus, what could this mean for the direction of the equity markets there?
Well, look, there was two different directions of what was announced. On stock markets, it looked like there was an implied put, and people went hard into the stock market right off the bat. In the macro economy, there's always this idea that the stock market and the real economy will feed off each other. They are historically completely uncorrelated. And what was announced for the real economy was very vague. We still don't have any details. There will be things trickling out, but the intention is to set a floor. To stabilize growth, to make sure that a doom confidence loop doesn't start getting things spiraling downward in a problematic way. So what they want to do is set a floor on the economy. They want to stabilize. They're not reaching for a higher ceiling. And I think that's what distinguishes it from the stock market, where they sent people off to the races from day one.
So when it comes to the economic data, what do you think is most crucial as far as what it says about the direction, not just for China's economy, but the global economy as well?
Well, look, the data are weak, and our September data were particularly weak, and the credit data were eye-poppingly weak. But I might surprise you with this. The reason that so many people thought that this was a whatever it takes moment, a Draghi moment, is that they read headlines saying that the economy is falling off a cliff, and the conclusion then was Beijing had to jump in and do something absolutely monstrous in order to save the economy, or terrible things would happen. But we look at our data; it's a very weak economy that's got a lot of problems. But it's not collapsing. It's not cataclysmic. It's not as bad as some of the headlines are saying. It's just not very good. So what the authorities needed to do was not save it from collapse. They needed to step in and talk up some more policy support, talk up, try to reverse consumer sentiment and instead of the other directions with some bigger moves, louder moves. And that's what they're doing. They're trying to stabilize the economy. This was never an attempt to sort of rocket things on the real economy side into the hemisphere.
Did you see a changed behavior in Beijing? I mean, I go off any number of articles. I think 2-3 years ago in Foreign Affairs, it was a shocking, brave article about not the thuggishness, but just the simplicity of the process in Beijing. Leland Miller, do you see something new out of Beijing?
Well, what's new in Beijing, but also I guess it's old too, is that Xi Jinping is in charge. This is his economy. This is his country. This is his party. And so a lot of the reasons that people have said that nothing has really happened, for several years now is that everyone's getting ahead of Xi. So I think that's one of the major issues. Authorities are not trying to push stuff now, but Xi Jinping doesn't want to stimulate the stock market if he doesn't have to. He doesn't want to juice the economy if he doesn't have to. He wants to worry about national security priorities.
Okay. How does he clear the market? I mean, we can go blather Western world. They need to, on a Hayekian basis, clear it in. They have the glory of a bankruptcy system here, there, or everywhere. What is the history of how China leadership clears failure?
Well, they're not going to clear the market, and I think that's what markets need to get in their heads. The history of this is that you've got you've got a backstop that we refer to as the blob, which is essentially backstopping all the liabilities in the economy. But they can't really announce that formally. So what they do is they build up bad debts, then they create vehicles for hoovering up those bad debts, and eventually those asset management companies themselves, go bad, and they have to be hoovered up by another vehicle that does that. And so essentially, you're allowing bad debt to just sort of be sucked around the system in a circle rather than clearing anything. And I think with the housing market in particular, the IMF and others say, oh, just throw an enormous sum and clear the market and then start over. Beijing doesn't want to do that. They want to be diverting their relatively limited amount of capital compared to the old days to doing things that, from a national security perspective, they care about: advanced technology, supply chain resiliency, building up a semiconductor ecosystem. So they're focused on that. They don't want to clear the housing market. It's just too much, too big a task. So what they're going to do is they're going to continue to sort of, work their way through this, and it's painful.
Yeah, Jess Menton, get one more in here, please.
So what ultimately would it take for officials to unveil further fiscal support?
I think they're going to unveil further fiscal support. It's just very clear that they didn't have one grand plan that markets expected them to have when they call press conference, and then they just sit there and stare at the camera. They will announce more vouchers, and they will announce more trade-ins, and they will give some handouts. But what China's consumers need, what the households need, is a plan to pivot the economy structurally to incentivize consumption. That's not what handouts do. That's not what anything that's been announced it has done. And that's why I don't think it's going to dramatically affect the macroeconomy beyond the short term.
Leland, this has been a clinic. Thank you so much. Leland Miller with us this morning. He is with China Beige Book. I can't say enough about those comments on the normal clearing of markets in normal economies, in the non-normality of Beijing right now. Our normality is to give you a data check into Michael Barr. We'll continue with that. Futures up 22. The VIX 22 level. It's plunged to 21.98. With our news in New York City, Michael Barr.
Thank you very much, Tom, Jess, John. Hurricane Milton has weakened slightly, but remains a ferocious storm that could land a once-in-a-century direct hit on Tampa, Florida. Bloomberg meteorologist Rob Carolyn has the latest.
Here's the latest information on Hurricane Milton, which is now located about 545 miles southwest of Tampa. It's a Category 4 hurricane, winds 145 miles an hour. It's moving east-northeast at 12 miles an hour. Hurricane and storm surge warnings are in effect for the coast of western Florida. There's now also hurricane warnings in effect for portions of eastern Florida, since the storm is going to maintain some of its strength as it crosses the Florida Peninsula late Wednesday night and Thursday morning. We're expecting wind damage as far inland as Orlando and Sanford. There could be some gusts well in excess of 80 miles an hour in those areas. In the Tampa area, the winds are likely to gust in excess of 125 miles an hour. I'm Rob Carolyn, Bloomberg Radio.
Rob, thank you very much, sir. Israel's defense minister is set to travel to Washington as the country weighs how to respond to an Iranian missile attack a week ago and steps up its military operation against Hezbollah in Lebanon. Yoav Gallant will discuss ongoing Middle East security developments with U.S. Defense Secretary Lloyd Austin tomorrow at the Pentagon. 2 climbers were rescued after being stranded for 3 days in the Himalayas. American Michelle Dorvac and Faye Manners of the UK were rescued by an Indian Air Force helicopter Sunday. They had been stuck at an altitude of more than 17,000 feet since Thursday after rocks severed the rope that was holding their luggage and then sent most of their food and equipment falling into a ravine. Manners spoke about the ordeal.
We've been climbing for 6 days. We were pretty exhausted, but we had some adrenaline because we really thought we were getting closer to the top.
Manners spoke on ABC's Good Morning America. Wow. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, John.
Michael Barr, thanks so much. David Giroux stealing Jessica Menton's thunder. Giroux out with a map, steal theft from Torsten Slok, Apollo Global Management, on utilities and use of data center power consumption. And basically, it's out west, except Virginia.
Right.
Jess Menton, what is it about Virginia?
I mean, that's the $1 million question. I mean, if you look at the utility sector in general for this year alone, a lot of that's been powered by the data center type segment in that particular group. So actually, if you look year to date, the utility sector in the S&P 500 is the third best performer. It's actually up around 25% this year. Not surprisingly, probably behind
Did
tech
institutions participate, or is this all like meme retail?
No. This is actually, you're seeing hedge funds and institutions jump in. So not just a retail type trade. And positioning shows that too. So right now it's getting a little bit stretched on the utility side, but you've been seeing that for a few months now in utilities.
So what you do, folks, is in the old days, you go to the letter D as in David, and that is Dominion. I think it's Dominion. Let me. Maybe they took Dominion Energy. That's just what you looked at was Dominion, and they've had a pop here, coming off of this. And what's the basic theme of your article? The pop's over.
Well, it might be one of those things because going into a Fed cutting cycle, usually utilities perform best the next 6 months, but that might be a little bit different because you've seen this front run. So that's why you might not see it continue for the next 6 months. That's just because there's been such a tremendous rally.
I misspoke. Dominion off the bottom, up 41%.
Right.
That's more than a pop.
Yeah.
That's pretty good. Okay. Look for that from Jessica Menton, folks. Out on Bloomberg, it's going to be some interesting work on the utility sector, which I didn't participate in at all. Futures up 20. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start off with some data. The trade deficit in the U.S. narrowing in August. It's actually the smallest in 5 months. The value of exports increased 2%. Imports fell 0.9%. The next big piece of data that comes on Thursday, we're going to get a reading on inflation with the Consumer Price Index. There's been some question whether the Federal Reserve will cut rates at all next month. Fed funds futures putting a 15% chance of no cut at all. Quick look at the VIX index that gauges equity market volatility from the options market, back above 20, right about 22 at this point. PepsiCo down close to 1% pre-market, trimming its revenue outlook for the year. They blame cash-strapped consumers, boycotts in the Middle East, and major recall that hit volumes of food and beverages. And Chinese stocks, they pulled back after gaining more than 10%. China disappointing investors, holding back from more major stimulus as it reopened after that week-long holiday there. And Honeywell planning to spin off its advanced materials division to create a business that may be worth more than $10 billion. Dow futures up 55, S&P futures 22 points higher, and right now the NASDAQ futures up 76 points. 2-year yield 398, the 10-year yield up 1 basis point, and that's at 4.04%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jess and Tom.
John, we got a problem. Out on YouTube live chat. Good morning out on YouTube. Thank you for all your attention. Quote, very, very fluent broadcaster, this young lady, Tom. Watch out, everyone, exclamation point.
She's coming after you.
Sai, is there something I don't know here? Can you help me here, Sai? You know, very fluent.
Do I have some fans on our YouTube feed?
Is this because we're closer to the food court here?
Maybe.
Than your desk, which is almost in New Jersey?
It is far. You know, I gotta say, I love that they started bringing out Mike and Ike's as part of the candy, not just M&Ms and other things. But
wait, when do they do that?
Yeah, no, it's happened in recent weeks, but not every day. So I have to walk up there and look on both sides, and sometimes I'm disappointed. But
okay, Jess Menton with us this morning. Sweeney, get back here as soon as you can. Futures up 22, nice lift to the market. This is a joy. Greg Giroux, and the only one close is Dave Wasserman at Cook Political Report, is the granularity of America away from all the endless news of two candidates and that. We are thrilled that Greg Giroux of Bloomberg Government would take time with us this morning. Greg, you're focused on Washington State Republicans, and you're focused in California on Democrats in a two-at-the-top outcome. Explain that.
Yeah, so in some states, it's possible for 2 Democrats or 2 Republicans to advance to the general election because they have unusual primary systems. Everyone runs on one ballot in the primary instead of in separate Democratic or Republican primaries, and the top 2 vote getters in that single ballot race advance to the general election regardless of party affiliation. So in states like California, Washington State, and even in states like Louisiana, it's possible to have 2 members of the same party compete against one another in the general election.
It even sounds like 1780 or 1790, almost. Greg Giroux, how is the left, the liberals, the progressive doing nationwide? Do they have traction in this election?
Yeah, I mean, I think they probably cast their lot in with Vice President Harris in the presidential race. You have 2 choices. The left is going to by and large back Vice President Harris. I mean, there are always going to be some disgruntled people on the left and the right who are going to maybe not vote, but I think there'd probably be a decent voter turnout in this election. In the Senate, I think it's a bit different in that control of the Senate may come down to not what progressives think, but what some Trump voters in Montana think, because I think the tipping point state for control of the Senate right now is Montana. And if John Tester, the Democratic senator there, can win enough ticket splitters in his state, which is going to vote for Trump by about 15 to 20 points, he needs so many Trump voters to split their tickets and back him. So, progressives will be very, I think, more important in the presidential race and in some down-ballot races for the House.
Right.
But in the Senate, while they're important in a lot of these swing states, watch Montana and what these Trump voters do.
One state I wanted to bring up is Texas, because you've written about how it's offering Democrats the best shot for a Senate upset. Walk us through the dynamics here and what's happening.
Yeah, so in Texas, Senator Ted Cruz is seeking a 3rd term. Texas has not elected a Democrat in a statewide election since the 1990s, has not voted Democratic for the Senate since Lloyd Benson in 1988. Wow. But Democrats have come close, including in 2018 when Beto O'Rourke, who was Cruz's challenger, came within 3 percentage points of beating the senator. That wasn't a good Democratic year. Texas, now we're in a presidential election year. Trump is almost certainly going to carry Texas, maybe not by a wide margin, but the margin in Texas 4 years ago was only 5.5 percentage points. So it's not a blowout state for Republicans anymore, but it's still going to be very tough for Colin Allred, the Democratic congressman who is Cruz's Democratic opponent, to get from, say, 47% to 50% plus 1.
Greg Giroux, Nate Cohn had that article 2 days ago, I think, in the New York Times, and I'm going to send it around the New York congressional race. The surprise of 2022. Do you frame the Greg Giroux work as a continuation of what we saw in 2022, or is 2024 really discrete and presidential?
Well, I think 2024, the race for the House, New York is the state to watch, New York and California, which makes it kind of different from the presidential and Senate election maps, which have a lot of overlap in, the industrial Midwest and in some competitive Sunbelt states. When we were looking at control of the House, yes, I'm looking at a lot of my 2022 notes in New York. You have some rematch campaigns there, and it's going to come down to Harris's margin in New York is going to be important. Biden carried New York by about 23 points 4 years ago. It looks like Harris is not going to win New York by that much, and therefore, those Republican congressmen seeking re-election may not have to win as many ticket splitters as they did before. But the disproportionate number of competitive seats for the House are in New York and California.
Greg, one final question. What's the single race Greg Giroux is most focused on?
Wow. Well, I think the Montana Senate race for the reasons we mentioned earlier, but also, I don't know, I think I'll pick New York's 19th district. Since we were just talking about New York, Mark Molinaro. This district runs from Ithaca east through the Catskills, some of the upper Hudson Valley, all the way to the past Albany. It voted almost exactly for Biden and Trump as the nation did. So it's a very good, I think, bellwether as to which way the political winds may be shifting this year.
Greg, this has been wonderful. Hope we can catch up with you on a weekly basis here as we dash to November 5th. Greg Giroux, folks, for those of you within Bloomberg Government and available on the Bloomberg terminal, I can't say enough about Greg Giroux. His newsletter, Ballots and Power, is absolutely must read. I can't say enough. Sign up for that as you're able to. Greg Giroux with Bloomberg Government. To me, Jess, it's amazing here. You mentioned Lloyd Benson in Texas, and I go back to the fiery Ann Richards. And
That's right.
Just gone.
And she was the last Democratic governor before, because then that was when George W. Bush won, and then he had a term, and then in the middle of his second term, he became president.
I mean, it's just completely changed around. The thing I'm most guilty on is Arizona. I still look at Arizona with like 2 or 3 electoral votes. It's a bunch of cactus and 12 people in Phoenix.
Not
and
the
it's
case.
out to 11 electoral votes
That's
now.
right.
And I'm completely wrong on that, folks. And a guy like Greg Giroux will straighten me out. Why are we up? Why are futures up 22?
Well, I mean, looking at what's happening here in some of the pre-market names, though, you have DocuSign up almost 7% on the back of some of the latest news here. But PepsiCo, unfortunately, down about, it's actually off the lows, though, from earlier. It's only down about 0.5%, but unfortunately, it cut its annual sales forecast on those demand worries.
John, can you see Jess like at a bar? Somebody asks about stocks and she vaults into like Barron's, like 6 stocks. This is what we see in DocuSign.
Yeah, well, Jess is a know-it-all.
Yeah.
And some people who go to bars like that.
Yeah, they do. Speaking of bars, George Strait started out in the bars. Menton's people,
Not many.
Jessica Menton's people said, come on, let's go. I need some Texas music if we're going to do it right. George Strait.
Oh, here we go, the king.
When he was playing Dixie Chicken in College Station. Good morning, Texas.
Texas is a place I dearly love to be, but all my exes live in Texas, and that's why I hang my hat in Tennessee.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Bloomberg Surveillance across the nation and worldwide. We're going to go to Connecticut here in a moment with Mr. Dalio in conversation with Sonali Basak. Right away, let's go to the Interactive Broker Studios and John Tucker.
And right now, the Dow futures indicate a higher open on Wall Street, up 63 points. S&P E-mini futures, they're up 21. And the NASDAQ futures right now, 71 points higher. As for yields, the 2-year down a basis point, 398. 10-year yield is 1 basis point higher at 4.04%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Jess and Tom.
Thanks so much, John. 7 years ago, Ray Dalio, with his leadership, said, let's do intelligent discussion to begin the autumn in Greenwich, Connecticut. Now, our Sonali Basak in conversation with Mr. Dalio.
Letting me lay it out. But also, I'm sorry I couldn't be there because Greenwich is my home. And you know, as was mentioned, you know, from the beginning, I was lucky enough to be part of this conference. And I take a great deal of joy when I see everybody there, many people I know. So anyway, I apologize. I'm in Singapore. I have a family office in Singapore. I have a family office in Abu Dhabi. And I have a family office in Greenwich, Connecticut. So, as you know, I'm a global macro investor. Global macro. And through is that many times we look at things that surprise us because they didn't happen in our lifetimes before, but they happened many times in history. And so I'm not a book writer, and I don't intend to. I'm a very practical guy who's got a bet on global macro. And what I found was that by studying history, I could make better bets today. And so whenever anything happened that I didn't recognize, I went into history.
We're having some technical difficulties here between Sonali Basak in New York and Greenwich and Mr. Dalio in Singapore. They're going to try to rewire that up right now. We'll go back to Greenwich in a conversation with Ray Dalio. Of course, Bridgewater, with all the turmoil that we've seen over the last number of years and some recent comments there on their performance, their general performance as well, has been, I'm going to be collegial and say, a challenging time for Bridgewater with some good moments and some more challenging moments. Rebecca Patterson speaks with us. Of course, she's formerly with Bridgewater, and we talk to some of their people from time to time as well. We're waiting to see from the Greenwich Economic Forum what we're going to do here to keep the show going. Jess Menton demands that we keep the show going. Sitting with us, listening for Mr. Dalio, is Omar Aguilar, Chief Executive Officer, CIO at Schwab Asset Management. And of course, this on the equity market forward. Omar, why are we up today? Why were we up in September? Why do we have this bull market that will never end?
Yes, good morning. It sounds to me that everything that we have observed over the last, 6 to 8 months is just getting back to normal levels of everything. If you actually think about normalization of inflation levels, as we go to lower numbers, we see normalization of what the Fed is doing with interest rates. We see normalization of the capital expenditure cycles. We see normalization of earnings growth. We see normalization of everything. And it seems to be that's giving a very nice support for the economy and, of course, for risky assets, and the market seems to be enjoying it.
I look, Omar, at the equity markets, and it still comes down to earnings season. When you and Liz Ann Saunders cross in the hallway, is there a belief in a buoyant earnings season?
Yeah, we think that the earnings, growth projections that we continue to see is going to broaden further than what we have seen earlier in the year. And we have discussed is that broadening of earnings growth that is consistent with just the overall the rebound on what we call the capital expenditure cycle. It is giving a very nice tailwind for unemployment, because in a certain way, by having healthy earnings and having corporates making enough profits, that obviously maintains the unemployment numbers and the labor market in a pretty good place. And also it allows the profitability to continue to support a lot of the economic growth that we expect going forward.
We welcome all of you across the nation, particularly to Charles Schwab San Francisco. With us, Omar Aguilar of Charles Schwab. We're going to continue with him, with Sonali Basak and Ray Dalio. Look for that on Bloomberg Digital later today. With me, Jessica Menton with Omar Aguilar.
And you just brought up earlier, Tom, about the bull market run in the S&P 500. I wanted to point out the 2-year anniversary is actually this Saturday on October 12th. That's when the closing low for the S&P 500.
What are you? Is this a job interview for Schwab?
No. I was going to say
how does she know that, Omar? I have no idea.
The S&P 500 is up close to about 60% over that span here. And so at this point in this cycle, and especially when you see the broadening rally in the third quarter, not just with the stocks, but then also when you're looking at earnings growth from the second quarter, now obviously we're getting third quarter earnings. What's your expectations moving forward as where we're at in this cycle here?
Well, thanks for the historical, data point. That's actually pretty interesting. And we have a lot of quants. We'd probably miss that point. But certainly, the big part of the question mark is, we have been going into this rolling recession to rolling recovery. And the latest that we have discussed with our clients is this potential idea of having no lending. We discussed earlier about the potential for recession that went away, the potential for a soft landing, the potential for a hard landing, for a bumpy landing. And we seem to be now going into this phase of the economic cycle where the likelihood of that we can actually smooth out without necessarily having a very clear landing is more clear. That's certainly what the bond market is pricing in. That's certainly what equity markets seem to be, putting together.
But the bottom line, Omar, with the vintage that you and I have, is corporations adapt. What we're seeing here, every sector in their own way, some fail. Look at Nike right now, down in flames. Pepsi challenged, whatever. But Omar, we always underestimate corporations' ability to amend and adapt and execute, correct?
Well, and I think in this particular part, Tom, is that, we underestimated the sensitivity of their corporate, health and their financial health relative to changes in interest rates. I think because of the COVID component, corporations became incredibly, smart in just, getting amounts of cash that allows them to stay afloat during the COVID, and that has seemed to be continued to be deployed. The deployment of cash by corporations has been particularly strong over the last several years, and that, is basically, to your point, adapts to basically what may come next. So anything that happened in softness of economics, seems to be going well. The other piece that has been great for corporations lately is the fact that consumer spending continues to be strong. And as long as we continue to see that level of consumption and productivity, those are really good tailwinds for the health of corporations.
So what are you suggesting to clients to buy and sell?
Well, one area that I would want to point out, because we have been discussing this in your program and in other areas, is that the possibility to start moving into cyclical sectors, and I think cyclicals continue to do well. We continue to think that any event of going to the next phase, most likely, given that interest rates are coming down, the ability for cyclicals to take the lead is probably going to be there. And in one particular area that hasn't worked as good as we thought it was going to be timing-wise is looking at profitable small caps. The profitability of small caps, when you bifurcate the world of small caps, the ones that are higher quality with good profits have outperformed the ones on the lower end by almost 60 to 65%, which is an area where allows still for active management. It allows for potentially, look opportunities there.
Omar, thank you so much. Omar Aguilar with us here. Greatly appreciate it with Charles Schwab today on, sustaining for 2 years, 3 years. I mean, Jess Menton's looking at 3 minutes. Can we get to the afternoon? What will the stock be on Thursday after the inflation report? Some of us, like Omar and I, are trying to get out to long-term investment like November. We'll have to see on that. So futures up 22. With our news in New York City, Michael Barr.
Tom, Jess, John, leave now. That's the word from Florida Governor Ron DeSantis today as Hurricane Milton takes aim at the state's Gulf Coast. DeSantis warning Milton, due to make landfall late tomorrow, will bring hurricane-force winds to Florida's east coast as well.
Now's the time to execute your plan. You do have time to get to a shelter. You have time to evacuate further than that if that's what you want. But that time is running out.
Milton's top winds reached 145 miles per hour, making it a Category 4 hurricane. A new poll shows Vice President Kamala Harris with a slim lead over former President Donald Trump. According to the latest New York Times Siena College poll, Harris leads Trump 49% to 46%. Meanwhile, the poll shows Trump leading Harris by a wide margin in the state of Florida. Trump has 55% to Harris at 41%. The poll conducted from September 29th to October 6th among more than 3,300 likely voters. Hezbollah acting leader has even more Israelis will be displaced as the militant group extends its rocket fire deeper into Israel. This as Israel said it killed a senior Hezbollah commander in a strike on Beirut. We get more from Bloomberg's Rosalind Matheson.
In Lebanon, we're coming to a much more broader front in the conflict than we've seen previously. I mean, Israel has said that its incursion into Lebanon is going to be targeted and limited, but now they're bringing in a fourth division. This is a reservist division. It brings it to 4, and they're moving ever into sort of the southwestern part of Lebanon. So you're getting a really elongated front in this conflict inside Lebanon.
Bloomberg's Roz Matheson. Finally, 2 pioneers of artificial intelligence have won the Nobel Prize in Physics, John Hopfield and Jeffrey Hinton. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Jess, John.
Michael Barr, thanks so much. So much going on here this morning. We had such success. Thank you for your response in the 7 a.m. hour to Rob Carolyn's report on the hurricane heading towards St. Petersburg. Beautiful explanation of the variability here. Rob, let's get an update right now. And instead of more, 30,000 feet stuff, let's just talk about the next 12 hours. What do you see as we stagger to early Wednesday morning?
Well, I see it maintaining its strength, Tom. The Air Force is in there right now doing reconnaissance missions, and they've found that the central pressure is around 930 millibars. So that's up from the 897 millibars we had overnight. Also, on the visible satellite photos this morning, it looks like the eye has filled in a bit, which would be another sign that we've had an eye wall replacement cycle. What's happening is the storm has weakened a bit, but its circulation is growing a bit. Plus, it's the south side of the storm is now interacting with the Yucatan Peninsula. So that's probably disrupting the flow a little bit. So we've dropped from a Cat 5 to a Cat 4 in the last 12 hours. I think it's going to maintain the Category 4 strength over the next 12 hours. 24 hours out, it starts to be affected by southwesterly winds aloft. That wind shear, and it'll start to pull some very dry air off the Gulf Coast. It'll entrain some of that dry air. That should lead to a gradual weakening. We think by the time it's approaching the coast of the Tampa Bay area tomorrow night, the winds are probably going to be sustained at about 125 miles an hour, and then it will weaken as it moves across Florida because it's not a huge hurricane like Helene was. It's a much more compact system. Therefore, its circulation is going to be disrupted more quickly than what we saw with Helene. It also won't be carrying as much rainfall. So that's the upside. The really difficult part of this forecast the next 36 hours is exactly where does the eye go? If it crosses St. Petersburg, Worst case scenario, as I mentioned earlier, for Tampa Bay, it takes the Gulf, pushes it right into Tampa Bay, and causes an enormous storm surge.
Right.
If it passes south of the opening to the bay, say it's Bradenton or Sarasota, then we're talking about winds of a completely different direction, and the storm surge isn't as bad in the Tampa Bay area. The storm surge would be high from Bradenton down towards the Naples area.
Wonderful. How late are we in the hurricane season? It's October. My memory is now or November's the end, but I don't hear that in your voice, Rob Carolyn.
No, the end of the season officially, Tom, is November 30th. That's when we close the season. Right now, the Gulf of Mexico is very warm. And I'll be honest with you, Tom, the models are showing another system developing next week in the northwestern Caribbean. Originally, they had this trying to work its way up towards the Keys or South Florida. The last several runs now develop that system and move it west through the Yucatan towards not this weekend, but the following weekend.
Rob Carolyn, thank you so much. And I'm sure we'll have continuing reports, particularly Wednesday, tomorrow, with Rob Carolyn, our Bloomberg meteorologist. From the Interactive Broker Studios with our Bloomberg Business Flash, John Tucker.
All right, Tom and Jess, the futures report being sponsored by IBKR. Markets never sleep. Neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indexes, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. Inflation apparently still weighing on shoppers. PepsiCo shares lower pre-market. They lowered their sales outlook for the year due in part to squeezed consumers. And the rising geopolitical tensions in the Mideast have sent oil prices surging. On the other hand, analysts watching to see whether OPEC Plus member countries flood the market. And this morning, as we look at Brent, the international benchmark, below 80, 78.63 a barrel, down almost 3%. Not often you can call a nearly 6% rally in the CSI 300 on record daily volume a letdown. Yet investors came away with a tinge of disappointment after China's stocks failed to sustain the huge jump witnessed in the opening minutes of trading. DocuSign shares rising as much as 7% pre-market. S&P Dow Jones Indices said the e-signature company is going to join the S&P Midcap 400 index before trading opens October 11th. And Hindenburg Research short Roblox. The firm says in a post on X this morning, Roblox is down 8% in pre-market trading in New York. Dow futures up 55, S&P futures up 24, the NASDAQ futures up 92. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Jess and Tom.
Thanks so much, John Tucker. Jess Menton, you're looking at that. Roblox, it's not a Mag 7 stock, is it?
It's not. It is not a Mag 7 stock. But nonetheless, clearly moving here. And also, its third quarter observed sales rising about 28%. But of course, that Hindenburg Research short call is pressuring it right now.
Right now, and this is a joy, we're going to go to James Dimon in London with Lisa Abramowitz. We'll have that for you in about 12 minutes. We're looking for Jamie Dimon again with Lisa. But right now, and this is a really important conversation. And I mean it, folks. Barry Ritholtz does a public good. He's out on, the social media and all that.
He's always on the Twitter.
He's on the Twitter, but he's doing his work, like actually trying to not lose money at Ritholtz Wealth Management. He's got a podcast as well. Barry, let me read you a tweet here. I basically thought it was a scam until decided to give it a try with just a little startup of $1,000, and I got $16,500 in just 7 days. It's so good, and everything works out. And on and on and on is Elon Musk basically farms investment you can't miss tweets. You went nuts on this. Discuss.
Yeah, well, we've seen this, and it really came to the fore during the pandemic when everybody was stuck at home and couldn't do anything and had some stimulus money in their pockets. Where we rob banks because that's where the money is, and social media seems to be where all the grifters go to scam people. And you would think, given technology and algos and artificial intelligence, this arms race should be relatively easy for an entity like Twitter or Facebook to manage, but there's an incredible amount of fraud that suckers Lots and lots of
Right.
investors. It especially targets older Americans, seniors who are not that great with computers or technologies. It's about $8 billion a year in theft. And it's just astounding that we tolerate it.
Just because of time, we're going to move on, but I got to read you one more, folks. I'm going to leave out the names. I'm thrilled to share that somebody, at Ritholtz, transformed my 1,000 into 11,500 in just 7 days, exceeding expectations, changing lives. Thank you, at Ritholtz, for expert guidance, profitable investments, unparalleled results. Good work deserves recognition. I highly recommend. And the thing that Barry talks about there, and I'll be honest, I lived this with my mother, old people, they love this stuff. Beware and listen to Barry Ritholtz. Pick it up, Jess.
So what you tweeted right before you joined us on the program, Barry, you're talking about how you're disagreeing with the assessment that the latest jobs report for September was gangbusters. Walk us through what you're seeing as far as when you're looking over the last few years and the kind of what we're seeing with the monthly average gains here and how that's differing.
Sure. So this is a classic example of denominator blindness. And what that means is we see a big number. Ooh, 254,000. Ooh, that's a scary number. It's 254,000 out of 161 million people. Each month about 2 million people change jobs, retire, quit, whatever. And another 2 million people enter the labor force, graduate school, start a new job. And the monthly number is the net difference between those two things. We don't care. I don't care about whatever that number is. I care about the overall trend. Are we creating jobs on a sustainable basis? Is that expanding? And as we've seen since 2020, yes, we've been creating lots of jobs. But just look at a chart going back to January 2021. It's pretty obvious that the pace of job creation is cooling. And I think that's one of several things that has finally, belatedly caught the attention of the Federal Reserve. We're not doing 900,000, 600,000, 800,000, 500,000 like we did in 21 and 22. We're dropping to, 150, 200,000 jobs a month, which is fine, but it's an early warning that the once red-hot labor market is cooling and the Fed is noticing.
We welcome all of you across the nation. Barry Ritholtz with us here. Can't say enough about his podcast. He gets an extensive conversation, 20, 30, 40 minutes with people in investment, people in the business of how not to lose money. Look for that podcast, Masters of Business at Bloomberg. We welcome on YouTube. Subscribe to YouTube podcasts. Coming up, Lisa Abramowitz with James Dimon. Jess?
And one thing I wanted to point out, because Goldman Sachs was talking about in those annual revisions that we saw in the labor market data a few weeks ago, that it wasn't including up to 1 million of undocumented workers here. So is there any way we're still underestimating the strength of the U.S. labor market, Barry?
We went from a situation where we went through a very substantial change in the tenor of the labor market, meaning between the huge spike in new business formation and a lot of people taking advantage during the pandemic to improve their skills, get new certifications, actually get degrees, that, small business has been a big driver of the economy. And a lot of what that surge was in 21 and 22 was a whole bunch of new businesses, whether it's technology or apps or consulting business or whatever it was. And so that initial surge, we put about $5.5 trillion into the economy through the fiscal stimulus of 3 separate CARES Acts, to say nothing about the longer term 10-year legislations that were passed. So the labor market is still fairly healthy, but that red hot status, that robust level we saw a few years ago, clearly cooling.
Barry, I want to talk about something off script. Maybe you could do an article on this. I just saw a major mutual fund. I guess it was 4-star, and they just raised it to 5-star at Morningstar. I'm sure champagne was broken out and all that. Barry Ritholtz on the star system at Morningstar. Can people do better at mutual fund and ETF investing based off the star system that's become iconic?
So I have to give credit to Morningstar for being very transparent and self-reflective of how their star system worked. Back in, I want to say about 10 years ago, they ran an internal analysis. And what does the star system mean for future performance? And the results were pretty okay. They weren't terrible. They weren't great. They were okay. But in Morningstar's own analysis, they said, if we can only look at one data point to make a decision on a mutual fund or an ETF, what would it be? And it turned out that the internal costs of the mutual funds were the single biggest determinant of long-term performance. Not because cheaper funds were inherently higher performers. It's just that the drag of expensive funds pushes them into the bottom half of mutual fund performance. And, I give Morningstar a lot of credit for coming out and saying, hey, our stars are a way for you to find reliable companies that have been fully vetted. You're not just throwing a dart, but be aware of the internal cost structure. The days of 100 or 150 basis point mutual funds, that's history.
I mean, I look at the mutual fund business now, and the whole shift, Eric Balchunas with this, over to ETFs. Do you treat an ETF, Barry Ritholtz, as a mutual fund equivalent, just with better liquidity, better tax structure?
You hit the nail on the head with that last thing. It's not an equivalent. It is a superior form of a wrapper for holding some form of an index, whether it's passive or active, in a taxable account, because there are no phantom capital gains taxes. There's no ongoing drag from that. Our friend Dave Nottig, who's one of the foremost ETF experts, has said, if the mutual fund was a new product, he doesn't think it would be approved by the SEC because of that drag from taxes. Mutual funds are great in tax-deferred accounts, IRAs or 401ks or 403bs, anything that's tax-deferred. But in a long-term portfolio that is taxable, you're much better off with the equivalent ETF. And most of the big fund companies, from Vanguard to BlackRock to Fidelity to Dimensional funds, they've all come out with corresponding ETFs to match their biggest and best mutual funds. And so investors have a pretty clear choice. In your retirement accounts, hey, mutual funds are fine. In a taxable account, stick with the ETFs.
Barry, I got 1 minute. Barry Ritholtz on Jamie Dimon. I looked up the 10-year annual return the other day. It's basically an act of God, easily 12, 13, even 14% per year for the last 10 years. What's the Dimon distinction for Barry Ritholtz?
So, he was very early in his team was very early in recognizing the risk. A lot of people don't realize this. JP Morgan Chase cleared out all of their subprime mortgages and all of their securitized junk way before the financial crisis hit. That could be the single most important factor in the success of JP Morgan. And Dimon is a modern day version of James P. Morgan, of the original JP Morgan. And he just seems to be the best banker in America.
Barry Ritholtz, thank you so much. Great brief there, particularly on the danger of what you see out on Twitter, some of these too good to be true ideas. Mr. Ritholtz, of course, masters of business and looking for Ritholtz management. I've actually said this to Jamie Dimon long ago, but, I don't think people really know Jess Menton, this kid's, and I mean kids, path to where he became. I had the honor of speaking to Sandy Weil about this, and Mrs. Weil, frankly, years ago. Jamie Dimon was from a Shearson family back when that really meant something. Went to Browning School in New York. Did better than good at Tufts, think summa cum laude at Tufts, and then did operational finance for Sanford Wild and American Express commercial credit. Then he went out to Bank One in Chicago before they mated with JP Morgan. I just can't say enough about the underestimation of his acuity in terms of risk management, which Mr. Ritholtz just discussed as well. So we're going to have a conversation here. This is with Lisa Abramowitz and Jamie Dimon. How do you perceive Jamie Dimon, Jess Menton?
Well, especially when it comes to speaking with traders and portfolio managers on Wall Street, they listen pretty keenly what he has to say. Of course, he did make that comment a couple years ago about the hurricane, sort of when C-suite executives wanted to jump in and make comments about that as far as where the economy was headed. Obviously, the U.S. economy is still held up pretty well, but he still sees potential turbulence here, depending on what inflation looks like. But obviously, it's getting closer to the Fed's 2% goal.
Let's go right now. We're going to get the bell open here on Wall Street with that inflation report on Thursday. Here's John Tucker.
Yeah, inflation's still weighing on shoppers. CPI is out Thursday. PepsiCo shares lower pre-market, and they are lower out of the gate, lowering their sales outlook for the year due in part to squeezed consumers. The S&P 500 in the early going 25 points higher. That's up about 0.5%, 57.21 on the index. The Dow Jones Industrial Average up 112 points. That's a rise of about 0.3%. And the NASDAQ 100 points higher. That is up 0.5%. Roblox among the most active of those shares right now, down just over 9%. This comes after Hindenburg Research revealed it was short of the stock. And some economic data this morning, the trade deficit narrowing in August to the smallest in 5 months. And that is your opening bell report. I'm John Tucker. And Tom.
John Tucker, thanks so much. Jess Menton and Tom Keene with you across the nation on Bloomberg Radio and YouTube. Subscribe to Bloomberg Podcast. We're waiting for a conversation with Lisa Abramowitz and Jamie Dimon. We're linking it up worldwide. This with the Dow up 100 points. The VIX in a little bit, 21.85. I'm going to call it an ordered market. Bitcoin flat, 62,000. And in the bond space, yields elevated a little bit, 10-year, out of 4% out to 4.05%. The real yield is really moved, 1.78%. We have a higher yield regime here into that inflation report on Thursday as well. And then I should say, just on to that, on Friday, Mr. Dimon will be a bit interested in the earnings of his bank.
That's right, because that's going to be a big thing that's coming up pretty soon here when it comes to earnings season. Obviously, JP Morgan's net interest income is most likely to be little changed from a year ago, even as its net interest margin was negative for the first time in 2022. So people watching pretty closely here what its total investment banking fees are, and obviously net interest margins as well as net interest income, Tom.
The dollar flat right now, of course, to the international economics of JP Morgan. Yen 148 is a churning yen, I would say, but decidedly weaker off what we heard from their new LDP authorities that we saw 2 or 3 days ago. Sterling 131.09, euro dollar of note 109.80, trying to drive that down. I'm going to Europe next week, and I'm just, come on, we got to get it down to
I was thinking about
95 cents.
potentially going the week after that because I have a week off. Maybe Spain.
Yeah,
Portugal.
It may not be the same after he goes.
Right.
You might reconsider.
Will I still be allowed to go after that?
We'll have to see on that. Brent crude right now, 78.71, down $2.22. So it's a more quiescent market here into the anticipation of an inflation report. And of course, one of the things that we've seen from Jamie Dimon over the years, for all of you studying the racket, you can read the entire annual letter, the MD&A of Jamie Dimon, as he reports on the bank and how the bank's doing, but goes on to bigger and broader issues as well. Of course, many people touting him for public office. There's a concern about, not a concern, I would say a conversation about his succession plan. It's going to be a little different than the TV show.
Of course.
I think. Well, maybe not that much different.
Were you a
but
big fan of Succession, Tom?
No, I saw a little bit, but not a lot.
I didn't jump on till the very last season, and then I had to binge watch everything.
I just didn't get
You're
there.
over it, okay.
But I see, Jamie Dimon and what's going on there. Right now, Lisa Abramowitz in London with the chairman, the CEO of JP Morgan.
I'm going to get into a bunch of different things, a lot of the questions that people have. But one main question is, we're seeing this sort of explosion in tech. A lot of people are pausing it. How are you sort of seeing the advancements that are most important so far? And going forward, what's most exciting? What's the most exciting for you?
Yeah, so first of all, welcome everybody. Thrilled to be here. First of all, you got to look at tech in the big picture. It's been changing society for hundreds of years. With agriculture and printing and steam engines and electricity and the internet. And tech grows in itself. The internet caused A, B, and C, semiconductors, and Gorilla Glass caused the iPhone. And so this is just another wave. We're here in London because we call it the tech conference here, but it's also diaspora now. So if you went back 10 years, it was mostly in the United States and concentrated in Silicon Valley, Boston, New York. Now it's everywhere. We have a tech center in Berlin, Glasgow, Edinburgh, which I think is great. You have more innovation taking place. I think it's really important for Europe. And obviously the thing now is all about AI, which I think is real and is going to change an awful lot of things. Can I just mention one other thing?
Please.
There's always been a fear of tech that's going to take away jobs, but you got to look at the big picture. And sometimes it does, but in the big picture, it is why mankind has gotten better and better, lives longer, GDPs go up, productivity goes up, health gets better, work hours go down. So people have to keep in mind the benefits are huge. We probably have to find a better way to help the people get hurt by it.
So you talk about the people who are getting hurt by it, and in a previous interview you were talking about how it's going to reduce some jobs and it's going to create others. Yeah. Which jobs do you expect to get eliminated and which jobs do you expect to get created?
Yeah, we don't really know yet. We shouldn't put our head in the sand. We know it's going to be true. So a lot of jobs, your job will be enhanced. You'll get more research, more questions, you'll have like a real super assistant, chief of staff on your shoulder when you wake up, but you're still going to be interviewing people. Other jobs, it will handle error rates or, it already hedges our trading equity floors. It's already been used for risk, fraud, marketing. Hasn't really eliminated a lot of jobs, but it created effectiveness in terms of productivity by, reducing fraud losses. And then if it changes jobs in operations and elsewhere, we'll deal with it. We have turnover 20% a year. We'd love to retrain people, redeploy them, re-educate them. And so I'm not worried about it. And if it works for the customer and the client, we can kind of do more. That's the other thing. For a successful company, if you're growing and expanding, you're actually almost always getting jobs. So, to me, I want to have a successful company, and we'll deal with whatever the downside is of AI.
So I was speaking with another head of a major U.S. bank who was saying that he expects his bank to keep growing in terms of business, in terms of assets, but stay the same size when it comes to staff. Do you feel the same for J.P. Morgan?
I don't really know, to tell you the truth, and I don't try to predetermine that. So if you look at what we're doing, we're still opening branches. We're still opening branches in cities around the world. We've added 1,000 people in AI itself. We're adding people and data scientists. Journey to the cloud. We have 44,000 engineers. So I think what you're going to see is some down, some up. In general, if we're a growing company, I would expect to go up a little bit. In general.
Typically, the Techstars is a conference where a lot of founders start to test the waters for IPOs, right. Potentially look to go public. There's been a deterrence to really going public as quickly as in the past, particularly for tech companies, just because there's so much private capital out there. Do you still see that? Is that a structural change, or is that something that's cyclical, just having to do with rates?
It's a complicated subject. Yes, there's private capital, and I think it's a good thing that people can raise money in the private capital markets. But it's a little odd that public markets are quite elevated and IPOs haven't gone up very much yet. So, but part of it is they have access to capital. Part of it is they're waiting. Part of it is they're reducing their own cash burn. They don't need as much cash. So it's a whole bunch of reasons why they're not going public. But I think eventually you do need healthy public markets to have people liquefy their positions, which all the venture capital, I just had lunch with a bunch of venture capitalists. They all are going to want to do and actually need to do at one point.
So do you expect that to pick up in the near future, or do you think it's going to remain muted for the foreseeable future?
I don't know. I honestly don't know. I think it may very well stay muted because markets may come down as opposed to just go up endlessly, and they may find other sources. So when I speak to a lot of private equity and private venture and stuff like that, they tell you they have more non-public sources. I do think it's very important that our policymakers understand, because even here in the United States, we've made it hard to go public. We've eliminated research on smaller companies. The costs are much higher. Those litigation expenses are higher. Filing with the SEC is higher. So I think it would be really incumbent upon us to try to make it easier and cheaper to go public. Allow more risk to be borne in the public markets, and we got to figure out a way to do that. And we actually have 10 takeaways from lunch, which I want to take a good look at.
So that raises a question of where people are going public. And we're here in London, which has lagged behind a number of other areas, particularly New York, and has lost clout in other areas too, especially since Brexit. Do you think that this is just a momentary blip, or do you think that just on a broader level, London is kind of losing a bit of its clout as a major financial center?
And so I think, first of all, I love the fact, if you listen to the current Labour government, they're talking about growth, investment, markets, capital markets, and they do need to do those things to help it recover. If they didn't do those things, no, I think it'll become more permanent. And, a lot of people, they go to the United States, there's more liquidity. It's easy to do. I mean, and so, or they have a lot of business there, which also making this a great business environment will also help companies going public here. But right now, the NASDAQ, the New York Stock Exchange, they're just more attractive places to go, and we'll see how that pans out. But I think it's important. We want to help them do better here. I'm not in favor of just advantaging the United States at the expense of Europe. But I do think that Europe needs to focus on, Mario Draghi's report. There are a lot of things in there that they need to do to get productivity back and growth back and markets back. They need the capital markets union, for example, which they've been talking about for years. They actually do really need it to foster growth around European countries.
On a broader level, just aside from the London market, what kind of activity do you see in the pipeline for fourth quarter? I mean, do you see a reluctance by companies to really engage with major actions because of the election, because of potential volatility, because of geopolitics, or do you see it really ramping up?
Yeah, so I've always, we always talk about backlogs, and I always tell my own people, be careful, because backlogs tend to grow and expand and then stop. There's a pretty good backlog growing of IPOs of companies. Whether it happens or not is a different thing. And M&A, yes, I do believe, I can't prove it's more anecdotal, that it's tampered quite a bit by not the election, maybe the election, but by rules and regulations. And you talk to a lot of boards of directors here. They talk about is the risk capital there? You can take the risk. They want to be very conservative. In the United States, it's more about can you wait 18 to 24 months to close a deal? I mean, that creates a lot of risk for a company. Particularly if you go to banking. I know a lot of the banks. I think they should be allowed to do deals. They're very, very reluctant because they can't wait. One of the last bank deals in the United States took 3 years. And I think if I remember correctly, there's a 90-day regulatory requirement. Well, obviously that's not taking place anymore. And we do have to fix these things. You want an active, healthy M&A market.
Just quickly, if policy...
And they're not all bad for competition, even though that I think it's true in certain cases. But, we've just become like an anti-M&A country, and that's a bad idea.
Okay. Just let's say that there's somebody else in charge of the FTC, and there are some different kinds of rules and sticks that people have to advance over. How much consolidation do you expect in the banking industry?
Yeah. So for the FTC, and I want to make very clear about this, they say to hammer everything's a nail. They're a little bit like that. But it doesn't mean they aren't right about certain things they say. I just want to separate that. Look, I think there are 4,000 banks in the United States. They're all in a different position. You could be a very profitable community bank. So I don't think the idea you have to merge is true. But if you're competing in certain business for certain clients and certain sites, you may need economies of scale. And, they should determine. So you do need consolidation. A lot of the, mid-sized banks want to do it. They shouldn't be hampered. And they would tell you, if I can't do it, you're basically ceding the ground to J.P. Morgan. And I think that's unfair. They should be allowed to merge. Their boards of directors should be allowed to make that decision based on what they think is in the best interest of the shareholders. This notion that government should get involved in every single little bank deal, I think is just wrong. And, they're adding social values to everything they do. It should be about safety and soundness. And a board of directors that says we need to merge or we want to merge probably means they're heading for a safer and sounder bank. That's their desire. You can give a lot of examples where it doesn't work. It doesn't mean it shouldn't be allowed. And I think we've got to be a little more open about letting these things take place and letting them take place quickly.
Aside from just some of the regulatory overhang, there is this question about how much, in general, the market's going to open up, and a lot of that has to hinge on the economy. You mentioned earlier that you are more pessimistic about a soft landing. I think you gave it a 35% probability back in April. Do you still think that, or do you think that the probability has gone up with some of the good data that we've been getting?
Yeah, no, here's important. I'm not talking about forecasting 2025. And I just think there's a lot of moving parts, a lot of things in the future which are inflationary. These, the most important thing taking place is these wars overseas, geopolitics, the terrible humane suffering, but also the bunch of these countries acting in cahoots against Western interests, against Israel, against Ukraine, against the United States. And that's really serious. So I look at a long amount of serious things. Soft landings are hard. I hope it happens. I don't know. I just wouldn't count my eggs in that one.
Do you think
and markets are open. When you say open, they're very, values are high. They're not low. Both equities and bonds, credit spreads are very low. So they're open, but people are saying they're not open for IPOs. So some IPOs, we just did one of the largest ones of the year, like last week, they're open for those who the market wants to buy today. But don't assume that they're not open. And, sometimes people would go public, they don't like the price. That's a very different thing. And you should think twice about that. When you think you know what a company's worth much more than the market might know.
That maybe it's an assessment of what you're looking for rather than the actual market being closed.
Exactly.
You said that there are a lot of inflationary things that are coming down the pike. Do you think that it was a mistake for the Fed to cut by 50 basis points?
No, actually. I mean, you got to separate the here and now. Inflation has definitely been coming down. They don't want to go into recession. Unemployment has been going up. They raised rates. They were late raising rates, but they raised it very high, rapidly to 5%, which I think is the right thing. And they're right to take their foot off the gas in that one. I don't think it matters that much, 50, 25, honestly. But I think that was okay. If inflation comes back, I'm looking at future things. The remilitarization of the world's inflationary. The fiscal deficits of the world, particularly the United States, are inflationary. The green economy is inflationary. Demographics are inflationary. It's very possible energy prices down the road, I'm talking about 2 or 3 years, will be inflationary. Those will hit later. Now, they should react at that time to those things, but I don't think you can anticipate that. We don't know that that's going to happen.
I'm so glad you brought up the deficit. I watched the Treasury auctions. There's another 3-year one today. I watch them every time wondering, are we going to start seeing disruption from some of the concerns that that you bring up, but also every single investor who I speak to says the same thing. Are you surprised that the market hasn't priced in a higher structural deficit in the way of higher yields or at least more volatility, at least at auctions?
Yeah, well, I have a lot of comments on that one. Commodity markets often don't price things in until they actually happen. And so it hasn't happened yet. The higher inflation, the higher structural stuff, even though the deficits are there, there's also sentiment, inventory, supply and demand of capital goods. So it's very hard to say. But that's why I think that longer rates may actually stay here and tick up a little bit as opposed to go down because of these huge deficits in the United States. And then the market's reacting, which the word you used of volatile or something like that, it's not always bad. I mean, I think we overreact sometimes to volatile markets, but I do think they'll happen again. Dealer inventories are very low. Banks are, the big market makers are very constrained. Not today. I mean, we have this anomaly where JP Morgan is going to have $1 trillion of cash and unable to intermediate in treasury markets or repo markets completely conservatively because we're required to hold that cash in very, like central bank reserves, something like that. So I think when QE finally gets to a certain point, you will see that. I may be wrong. And again, if it happens, I don't think it's a disaster. It's not bad for JP Morgan. I do think policymakers will get upset. They don't like seeing that type of thing. And I think there are fixes to it, and I think they should start working those fixes today.
Something that you said about how markets sometimes don't respond until an event is there.
Commodity markets.
Commodity markets.
So think of stock markets that are forecasting earnings and cash out 5 years and 10 years and always adjusting it, and they're buyers and sellers, and equity prices adjust. But if you look at commodity price action, while sometimes it's forecasting the future, it actually is looking at supply and demand today. So the most important thing is supply and demand today with some sentiment, some inventory, how quickly you can replace supply and demand. So all commodities are different, but think of the treasuries a little bit as a commodity.
Well, do you think that treasuries, especially if you look at it as commodity, which is a wonderful way to look at it, that there is sort of a catalyst in the election with respect to realizing what the deficit could be?
Yeah, people are making charts about what everyone said and what it might mean for the deficit. What they said and what they actually do and actually happens are completely different things. I'm not going to worry about that. I think what you should worry about is the deficit today is 7% of GDP. When Volcker was around and we had very high inflation, it was 3.5%. The debt to GDP is 35% back then, 1982. It's 100% today. The deficits today, the biggest peacetime deficit we ever ran. Deficits by their nature are inflationary. And at one point we have to deal with this. I mean, I would beg the government to set up a powerful Simpson balls type of committee authorized by the Congress, up or down vote. It's probably the only way to do it. The other way to do it is wait until there's some kind of disaster in the market, and then you're kind of forced to do it at the wrong time. And I don't know when that might be. Will it happen next year? Probably not. But can America afford 120% debt to GDP? Probably. But should we wait for that hockey stick to start? I don't think so. I think it's just a bad way to run risk.
So you mentioned government. Libby Cantrell of PIMCO, she runs public policy over there. Every time she comes on, she tells us that when she talks to clients overseas, she has to tell them, no, Jamie Dimon still isn't running for president. You get that question so much. Does it annoy you or does it flatter you?
It's more annoying than not, because I can't run for president, and there was no opening. I mean, there's no way that it was even possible. So it's a little flattering, but, I just want to help our government do the right stuff. I think there are a lot of things to do to make America far better off. And particularly, because I've mentioned this many times, a lot of things we've done which I think are bad, whether you're Democrat or Republican, we support, they're often done in the name of good, have hurt the lower 20%. They're dying younger, their income didn't go up for 20 years, they're the ones who have more crime-ridden neighborhoods, their schools don't work. We should acknowledge that as citizens and do something about it. Like I said, a lot of policies put in place have the exact unintended consequence, and that's who they hurt. Like, for example, growing the economy well, the people that help the most at the lower end. And I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
You haven't endorsed a candidate, and I wonder why. Is it because you think, as the leader of a big company, you've got to work with anyone? Or is this just that you can't decide this particular time around?
I will decide, okay, and I will vote. I reserve the right to do whatever I want. Okay, I'm a citizen. I can vote. I can say what I want, and stuff like that. I've never been in the practice of endorsing candidates, and so. But I'm thinking through what I want to say or do or something like that.
In a recent Washington Post editorial that you wrote, you talked about how you think it would be important for the next president to have a private sector individual at the cabinet level to really advise.
Like half.
Half?
Yeah.
Okay, which positions do you think should
All
be?
of them. I mean, look, I look at the government. The American public needs and deserves very competent, effective government. And if you go around, they don't believe that's what they have. And, so people have all these things the government should do, but a lot of the things the government does, it doesn't do particularly well. It does some things particularly well. It does a lot of things only the government can do. But we have to be, again, cold-blooded, clear-headed, pragmatic about what works, doesn't work. And over time, there have been less and less people in government who were in the real world. You may think whatever you want about, I'm not blaming economists or teachers or stuff or lifetime politicians. That's not the same thing. And there are lessons in the real world. Even FDR, when he's getting closer and closer to World War II and needed to start building tanks and bridges, he took the people he'd been excoriating for years, the heads of GM, GE, DuPont, and got them back. I need you to set up these production boards and grow do these things. So it's about growing the economy. It's not about putting business people there. I think we shouldn't insult each other as citizens, try to understand each other. And I think it'd be great if the next president, they really want to, what's that word they say, unify, put someone from the other party in your cabinet, which, by the way, is what Eisenhower did. And that whole op-ed kind of came out of Eisenhower. He got the right people there. They studied the issues. They got the policy right. He never blamed people. He never insulted people. He never, he was always civil, which I think is a better way to be. He didn't denigrate the country, didn't denigrate classes of people. And so I just think that's the better way to be. And it's a more unifying leadership than, yelling and screaming at each other.
If someone theoretically were called upon as a business leader, would you suggest that they go?
It's up to them. I wouldn't suggest they go and not go. It's their life and how they think they can contribute to stuff like that. So,
a major focus for you in your recent letter to investors and just in interviews has been geopolitics, and the situation is pretty dire. And I wonder if what you're telling clients, what they're doing, how they're arranging in preparation for potential escalations in a whole bunch of different hotspots.
Unfortunately, I go to a lot of things and people like, tell us the positive news. What's the good spin out there?
I was getting to that.
I don't do anything like that. The truth is the truth is the truth, and the truth today is pretty ugly. And we have this war now. Almost 1 million casualties in Ukraine. The Ukrainians say that 20,000 children have been kidnapped and sent to Russia. It's quite clear that Russia, Iran, and North Korea are acting in cahoots. That China isn't kind of part of that, but they're aiding and abetting Russia. China and Russia have spoken about dismantling the world order set up by America and the Allies after World War II, which have been quite successful in keeping peace. They want to do it differently, and that's their right. I don't think it's a good idea for the Western world. And of course the terrorist acts in Israel is being attacked, basically on 3 or 4 sides. This is tough stuff. American warships are being attacked every day in the Red Sea. The head of the FBI just said the terrorist threats internally and externally to the United States have never been higher. I think there was a lesson on when Ukraine was invaded. The world isn't a safe place. We've got to get rid of the illusion it's safe and somehow peace is at hand. So we need a very strong military, which means we have to spend more money, at least every analysis I've ever seen for that. We need a very strong economy. We have to subordinate some of the stuff we do to national security. And we have to engage much better with allies in trade, finance, development finance, and things like that if you want to hold the world together. And so, yeah, I think this is the most important thing. Dwarfs whether we have a soft landing or a modest landing in the next 12 months. That, to me, as a business person, almost all of us in business have dealt with that many times. That is not a big deal.
I guess, how do you then advise a potential client about what national security is? Is it a car? Is it AI? I mean, basically, how do you prepare for the changing world that we live in?
Yeah, so this is a very important question. So first of all, in terms of managing risk, when you look at the potential outcomes, I mean, all business should look at a range of outcomes and try to be prepared for them, whether or not they think they're going to happen. And then, could war affect the global economy? Absolutely. It can cause inflation and no growth. It may have no effect, but you got to be prepared for those things. And then on strategy specifically, we've actually hired Paul Henley, a former U.S. Army national intelligence guy, forming a group, working with our research people, internal people, to answer exactly those questions. What is national security? Jake Sullivan talks about the small garden with high fences. What's in the garden? What's related to the garden? How would you do that? A lot of companies are still looking at their own supply chains. They would say, no, I get these components from Mexico or Vietnam, but inside that component is a very important one from China. So it's going to take a while, but every country, if it's national security, has the right to say this is what we're going to do to protect our national security. And so we need work to do. And then the related, I call it mercantilist behavior. People are getting upset at China about EVs and lithium and solar. If it's unfair competition, that's a different issue, but it also needs to be addressed.
Jamie Dimon, unfortunately, we're out of time. It has been a pleasure speaking with you. Thank you for taking the time with us. And now I'm going to throw it back to you.
Lisa Abramowitz, thank you so much. They're in London with James Dimon, a wide conversation there, particularly around some of the geopolitics and maybe with some allusions to the election as well. Jess Menton, what did you hear there from Mr. Dimon?
Well, Jamie Dimon pointing out that they have added 1,000 artificial intelligence workers. And then he also talked about how that the company has made it harder for, just in general, when you're looking at the IPO space, how it's been harder for companies to go public in the U.S. and that it was odd that public markets are high, but IPOs haven't gone up. So he was kind of discussing more of the conundrum with that, but then also saying that soft landing is difficult, but he does hope that it happens, not assured. But he's been in that camp for a few years now, and the economy has still maintained its strength, clearly.
It's going to be interesting to see, and of course this alludes back to his affection for the United Kingdom. You saw that pre-Brexit, the day of the Brexit vote, the day after the vote, and post-Brexit. JP Morgan with a real commitment over to London as well. Let's commit to a market check. We can do that. We're up large. Now we're not. We're flat. On the Dow, SPX up 0.5%. There's some Dow noise there. NASDAQ 100 up 0.8%. Some oddities in the market. Just explain to me why the Dow's flat. When you can get to it off the Bloomberg.
Well, obviously, it's not a market cap weighted index, it's price weighted index. So usually when you see technology or growth stocks going one way or another, it doesn't have the same type of components here.
Maybe Pepsi, I don't know. Is Frito-Lay a Dow stock?
Right, exactly. So that's one of those where you're looking at the components here in the S&P 500.
We're seeing right now where the markets lift, but the Dow doesn't participate. The 10-year real yield does lift higher, up a solid 4 basis points, 1.79% on the inflation-adjusted yield. The full faith and credit 10-year 4.05%. The Paul Sweeney yield, the 2-year yield, quoted in Orlando, Florida as well, 3.99% on the 2-year yield. What a regime shift in yield here over the last, say, 48 hours. We're all watching gold down $8. $26.57 on Brent crude, a dash to 80 actually early this morning, out at $81 a barrel. Now Brent crude comes in $78.06 a barrel, down $2.88, almost a 4% move on a pullback in global Brent crude. The dollar complex flat, no other way to put it. We're watching yen, weaker yen, 148.28, substantially weaker over the last 3, 4, 5 days as well. It's been a pleasure to wear my Texas A&M tie in honor of the Dixie Chicken, where Jess Menton used to close the bar with a Randy Rogers band. From San Marcos, Texas, Randy Rogers. Good morning, Texas.
Small town.